Let's get this running up here. All right, what's up for everyone on the replay? We're actually going to be making the first part of the stream a video, so I think you'll like what it is. I'm going to be going, going to be going over the 5 stocks I just bought and also the stocks I've been selling, and we'll be doing a portfolio update. So we'll go ahead and start that now. I won't be reading the chat for a couple of minutes, but thank you to everyone on the replay. So here we go. Yo, what's up guys? In this video, I want to share with you the 5 stocks I just bought for the first time ever, and I want to share with you the stocks I'm actually selling. So if you like this kind of stuff, please drop a like on the video for me, and let's just get straight into this. I don't want to waste any of your time. And before we show you the stocks I bought, I want to do a quick portfolio update. So this is my Moomoo portfolio, where once I buy a stock in here, I legit never sell it. That's what it's called in the top left, buy and never sell portfolio. And today's pretty good. We're up 1.33% or $690, and we're up 35 grand all time. I've been very grateful. We've been very blessed in this portfolio. Amphenol stock, I've been pumping this one as a huge AI infrastructure play, hit a crazy new all-time high today. So that's not the stock I'm selling. That one I'm going to be buying and holding forever, because some of my biggest regrets have literally been selling out of great companies, trimming great companies like Robinhood. I only have 5 shares left. I used to own like 58 more shares, but I sold it at 36 a share. How stupid do I look? Because now it's $100 a share. So sometimes your biggest regrets will actually be selling and trimming out of stocks. So here's my Webull portfolio. All time in here, we have slightly underperformed the market, but still happy returns. I'm okay with 33% lifetime gains or $4,900 in this account. And here are our total stocks by total equity. And this is the stock we just trimmed. We sold 1 share of AMD today at a new all-time high. AMD is nearing $1 trillion market cap, and they're trading at 107 times next year's net income. The risk reward does not look good buying today. Honestly, do not buy AMD today. If anything, as a shareholder, I'm actually trimming. I'm definitely not fully selling out of AMD. You don't want to fully sell out of AMD, but I did decide to trim, and that's where I bought these new companies. So, oh wait, before I share that, let me share my Robinhood portfolio. This is called my dividend-only account, where every stock in here pays a dividend. And year to date, how are we doing? We're only up 0.1% year to date. We're up 11.8% the past year, and these are the 7 stocks we own in here. We kind of keep it simple, 7 stocks, and here's our lifetime gain on every stock. The only company we're down on right now is McDonald's, but I'm not worried about that. Oh yeah, and we have a Roth IRA. It's a bit of we're trying to bring the growth back. We have some defensive names like a CareTrust Healthcare REIT. We have HCA Healthcare, Cavco, the factory-built housing company, and we have Innodata, one of my favorite software companies. So that's the portfolio update. Now let me share with you the stocks I just bought for the first time ever, and these are the stocks here. So the first stock I just bought literally today was Rollins, ticker symbol ROL. They're on a major downtrend right now, and they're still not good enough to fully buy, because if we look at a forward PE, they're still trading at 34 times next year's net income. But here's what's so cool about this business model. There's no other stocks like it. They are a bug, pest, and termite control company, specifically for C&I customers, commercial and industrial, and health codes. Like if you have a bunch of cockroaches or an infestation of pests and mice or whatever, you get that fixed right away. So yeah, here's the revenue breakdown. 42. Here's why also it's tough buying today. This forward PE, 33. That's why you don't buy today. But they're still on such a massive downtrend where I thought it's honestly a decent time to buy a small position in them. So yeah, they do termite control. So commercial is 35% of the revenue. Termite and ancillary revenues is 21%. And they have this franchise business where they collect money, but they're just a money printer. If we go to revenue over time, they also do a bunch of acquisitions, but it's very consistent. It's kind of AI proof, recession resilient, recession proof. Even in a recession, you're still going to get those mice fixed. And here's the net income. They're easily making over 100 million net income a quarter, and it just grows over time, their bottom line. Their EPS is CAGR'd at like 15%, double digits. So that's what's cool about this one. You also get a nice yield. So if you seek dividends, they have a 1.7% yield. I don't love the payout ratio. They pay out 60% of their earnings, but I'm still doing some more research on this one. But I just wanted to share with you that this is one of my most recent purchases. The forward PE doesn't look great still, but it's always traded so expensive because it's such a premium company. Like for all of history, the historical average is a 52 PE. As we can see, it's that blue line at the top there. And this is like the cheapest they've ever traded at. So anyway, that's the first stock I just bought, Rollins, ticker symbol ROL. The next stock, and what's up for everyone in the chat here? Sorry, I'm not reading the chat right now. I'm kind of going over the stocks I'm buying right now. But hey, what's up? Plasma, Looney, Vegas, Silent, Rubes. Hey, shout out to members. I appreciate everyone It's on the stream today. So here's Moeller Industries. This is the next stock I just bought. This one's fascinating to me. They have this has the DNA of a multi-bagger, in my opinion. I hope it's my next Powell Industries. So it's on a little downtrend right now, and I decided it's a decent time to pick up some shares. Here's why. Over 10% of the whole company, like more than 10% of the whole company, is just their net cash on hand. So they're a $13 billion company, and they have over $1.4 billion of just cash on hand with literally no debt. So one thing I love, it's a huge safety net. They legit got no debt in a fortress balance sheet. And the next thing I love is just good growing fundamentals. Actually, specifically, it's the net income that's grown over time. They've had a crazy margin expansion over the past couple of years because of the kind of AI tailwind. And look at these year-over-year growth rates to the net income. It's very impressive. And look at this quarter specifically. They beat on every metric. The orange line's what the analysts projected. They beat on revenue. They beat on net income by a huge chunk. And if you're wondering, is this some accounting fluke? Did they actually beat on net income by that much? They really did, even on EBIT, earnings before interest taxes. So if they beat this quarter, what are they going to do the next couple quarters? Plus, you get a 1% dividend. It's very close to a 1% dividend, a 15 PE ratio. So they trade at 15 times net income. Over 10% of the market cap is cash. And here's what industry they are in. Here's what they actually do. So mainly they do copper piping. I want to go to their investor presentation. I'll be quick about this. Then we'll get into some of the stocks you guys say. But yeah, global manufacturer of copper, brass, and aluminum. They have exposure to HVAC, plumbing, electrical, and industrial markets. So that's kind of the growth opportunities there. And check out the financial how financially sound they are. So right here, they have 4.2 billion of revenue, 1 billion of that's EBITDA, 90% of that's free cash flow, and they have no debt. And that drives strong shareholder returns, 22% average return on invested capital, 90% total shareholder returns every year, and a 14.2 times net income. So they're either number one or number two in core products and key markets as well. And these are all the markets that they serve. Here's some of the actual products. So it just seems like a cool business that could benefit from all the AI. So they're in climate. This business has a 29% margin. Industrial metals has a 10% margin, and piping systems has a 28% margin. So very cool company. They're like I think they're the only Canadian. They own the only Canadian copper manufacturing plant. So they're a very cool market, just a cool industry, and with great fundamentals, legit 15 times PE, and piping systems. This is their largest business, piping systems. Check out the growth year over year. That business grew 18.8% year over year, growing very fast. So that's what I love to see. Very net income positive with 20% net margin. So for every dollar that comes in, they keep 20 cents, or for every $100, they keep $20. And look at that margin expansion over time. Used to be like 5 low single digit margins. Now it's 20% plus margins. Anywho, pretty cool company with no debt, 10% market cap is cash. You can even subtract 10% off of their market cap and do like an X cash multiple. So that's the other stock I just bought. And the last stock I'll go over, and then we'll get into all the stocks you guys have in the chat. Sorry, I know I'm a little behind here. Is Netflix stock. I'll be quick about this one because I've kind of pitched this one a bunch the past couple of streams. But what's so cool is I think the risk to reward looks good to nibble. Like if you want Netflix as 4 to 5% of your portfolio, don't make it 4 to 5% of your portfolio today. You wait, in this high volatility market, now's not the time to go all in. You start the nibble, but you don't make it as the full size position that you want it to be until they fall 5 to 10% more. What is this? Eric was sentenced to 30 months in prison for defrauding Netflix of $11 million intended for a TV show, which he gambled on cryptocurrencies and speculative trades. Oh my goodness. I've never heard of 47 Ronin, but sentenced to 30 months in prison for defrauding Netflix. Anyway, what I love is the risk to reward. There are some fears like losing a slight bit of streaming market share to YouTube TV, but that's because they're free. Netflix only trades at 21 times forward PE. It's a subscription model company, and they actually just rose prices by $2 a month. I don't know about you guys, but we're not canceling our Netflix subscription. They really do have pricing power. And look at this growth over time. This is just basic metric revenue right here. They grow their revenue like crazy, but what about net income and profits? It's also at a record. And look at how they grow their bottom line over time. So that's why I like Netflix. I don't see this stopping, especially with the new price increase. That could bring earnings up even higher. And they only trade at 21 times next year's net income. I don't see it getting much cheaper. Morningstar says they're undervalued. An unparalleled global subscriber base, creating virtuous cycle of content investment, steady international market penetration, and expanding operating margins will drive long-term value growth That's what Morningstar to say. And I agree. I also love their advertising business. They have this ad tier subscription that it's going to grow super fast, in my opinion. So, yep, those are the stocks that I have been buying. Hey, what's up? Silence says, what's good? It's raining outside for me in Florida. Hey, I actually like the rain. So, should put PFV in your dividend account. Well, the thing with, actually, let's start with this stock. And again, I'm so behind, I apologize. What's up, LLP Papa? Just added to my APH. Dude, congrats. APH is at a crazy all-time high today. What's up, Burner? We'll try and get to MYE. What's up, Looney, Tom, Paul, Oliver? What's up, everyone? So, Pfizer is questionable because of the total shareholder return. So, in my opinion, you buy Pfizer to fully maximize your dividend income. You buy a share right now, you get over 7% of your money back just in a dividend every year. But look at the stock price. Actually, Pfizer is the exact same stock price that it was in 1998. So you bought a share of Pfizer in 1998 for $24. Well, it's still $24 today. So historically, you don't get any stock price appreciation, but you're mainly buying them just for the dividend. I know they've also been struggling because the sales popped up, again on the 2020 vaccines and stuff, but that's kind of slowed down a little bit. What is this over here? FDA approves Pfizer Embrace for metastatic. Okay, that's good. I don't know if I can say some of these words on TikTok, but actually TikTok already took down my stream. I forgot. Oh yeah, hey, if you're on TikTok, I'm actually about to end the TikTok stream. Please go to YouTube. Just type into YouTube Nathan Robert if you want to continue watching. Sadly, TikTok removed the stream from eligibility, so viewers will spout 0. But type into YouTube Nathan Robert if you want to help a brother out. I sell nothing. So, hey, yeah, Tom, Rollins is pretty cool. That's my new purchase. What's up? So, Plasma says TIC. Let's check this one out. I've actually never heard of this one. So TIC Solutions, they're a $1.7 billion company. So they're lower than they IPO'd in 2024, but they haven't been public for that long. So they do inspection and mitigation, consulting engineering. Well, how's their main business growing? Well, for the few quarters that we get, it doesn't look like they're growing too fast. Let me go to just total revenue. Actually, it is growing fast. Well, revenue combined grew 108% year over year, but we really don't have much data to look at. And it looks like they're still net income negative, so they're not making any money yet. But I know there was some other engineering and consulting business that tanked recently. Actually, the future revenue growth looks great. Revenue is supposed to hit 592, and they are supposed to make net income in 2 quarters. So there is some light at the end of the tunnel. So I think all eyes will be on the next couple quarters watching this company get net income positive and potentially double or triple digit revenue growth rate. Hey, this company's headquartered in Hollywood, Florida, and unfortunately we can't pull up their website. That's so weird. Lab testing services is what their description is. Interesting there. Paul said Palantir. Dude, Palantir is one of my favorite stocks to add to your watch list right now. It has such good fundamentals. Is there any news? Palantir partners with NVIDIA to develop sovereign AI solutions for U.S. government agencies. Palantir expands partnership with Surf Air Mobility. Any other news? Palantir and Zeta, always doing partnerships. U.S. Army selects Palantir as cloud data layer. Michael Burry closes half of his Palantir short while maintaining put options. Michael Burry highlights Palantir's technical decline amid broader AI sell-off. Anyway, I would put this one on your watch list just because the fundamentals are so good, but you still want to be careful buying today because at today's current prices, Palantir still trades at a 77 forward PE or 77 times next year's net income. It's still a bit of a tough sell, but here's why they certainly deserve a high multiple. Their main business, the government revenue, is up 76% year over year. That's the fastest growth rate on the entire screen, and it's all organic. The growth rate's growing. So many police stations, the Air Force, military all use Palantir, and the Pentagon. And if we go to their commercial revenue with S&P 500 companies, it's growing even faster. It's up 95% year over year. That's also the fastest growth rate on the entire screen. And they're crushing expectations every quarter. The orange line is what the analysts project. The blue line's what they actually report, and they beat on net income for the past 3 quarters in a row. Expanding margins, literally everything here is headed in the right direction. Net margin went from a 24 to a 53. Margins doubled. So for every $100 that comes in, they keep $53 after tax. Revenue grew 84. Net income grew faster at 302. And a huge safety net is Palantir is a monster. They have no debt. Monster balance sheet, $8 billion of cash. Look at the cash pile, how it just grows every quarter. $8 billion of cash, legit no debt, literally no debt. So, and they print free cash flow as well. Nothing wrong about this company, except the only bad part is that, what is that saying? The only bad part is the forward PE. Okay, I guess they're like telling you the calculation of how they calculate all this stuff. Well, that's cool. Anyway, that's Palantir. I love them. Definitely put them on the watch list. So next up, Overall Fitness said Supermicro their headquarters were just raided by Taiwan over chip smuggling. It's funny, we were talking about this legit days ago. We were saying it's hard to trust Supermicro's management, and literally yesterday, Taiwan authorities raid Supermicro offices and probe of alleged illegal NVIDIA AI exports to China, basically smuggling chips into China. Investigators seized approximately 50 Supermicro servers and detained several suspects. They stated its cooperation with full law enforcement. Anyway, they've had a management aside for a second. It's hard to be bearish because look at this forward PE. If analysts are just correct about these net income numbers, they're only trading at legit 10 times next year's net income. Morningstar says they're undervalued, but it's highly profitable operations and unusually low. Okay, well, that's not real analysis. Anyway, it definitely is tough to be bearish at an 11 forward PE. They're one of the few people that, can go ahead and install the new NVIDIA Vera Rubin chips in your data center for you. Basically, you whenever you buy chips, you hire Supermicro to come install it on the servers for you. So yeah, their new unit contains 8 liquid-cooled compute racks with 288 nodes, and it can hold up to 1,152 NVIDIA Vera Rubin GPUs and 576 NVIDIA Vera Rubin CPUs. Cool. Well, that's Supermicro. Another management issue here. So yeah, their chips they were accused of smuggling chips into China. And back here, they were supposed to report earnings this day. They just didn't. Like I was watching, it was like 4:10 p.m. We were waiting for the earnings. They just never did. The market freaked out. They had to get new accounting lawyers or the whole new accounting firm to do their accounting work. And it was just a nightmare of management. So anyway, let's see what's next here. Innodata stock. Yeah, dude, Tomboy, what's up? I love Innodata right here. This is one of my favorite software stocks. This software is so valuable. It's used by NVIDIA, Amazon, Google, NVIDIA, and Microsoft. And now the reason they gapped up right here specifically is because Palantir is now a customer. They announced it on earnings, and Palantir is going to be spending over $50 million a year on their software. And I honestly think analysts are wrong. They say Innodata trades at 71 times next year's net income. Here's why they're wrong, in my opinion. They haven't updated the future net income, in my opinion. Look at this quarter. Analysts projected 76. They did 90 million. And if we go to net income, they expected 2.8. They did 14. That's an unusually big beat. Was that some accounting fluke? It wasn't. Even on the EBIT, earnings before interest taxes, they beat. And if they beat legit hundreds of percent this quarter, I think they're going to beat all the quarters to come. And it's still a small company. This is what's cool. They're only worth $2.4 billion. Out of all the companies worth $2.4 billion, I want to own the one that's already net income positive. So this one's net income positive, and the revenue's growing extremely fast. Revenue grew 54% year over year. After grew, let me zoom in. It grew 54, after grew 120%. So incredible streak of growth, and the growth is not done, in my opinion. Any news? Nope, no news around this company. Oh yeah, I made a video about this one back a while back. Anyway, Innodata is a really cool software company. They're a data labeling software company helping build LLMs. So what's your opinion on day trading? Take a look at your Ouster holding. Yo, what's up, Yusuf? Ouster has been my quickest ever 200% gain in my life. I did not expect this. So literally just a few months ago, there's my buy order right there. There's I unfortunately only bought 4 shares. There's my buy order. See the B right there. About 4 shares of Ouster on this day. And then it hasn't even been that long, and I'm already up, 250%. I didn't buy much of this company because they're still, losing net income. If we go to net income right here, they're still losing net income, but they're narrowing their losses, and the revenue's growing very fast. Ouster, if you're wondering, is a LiDAR play. And they just got qualification for the Build America, where basically most of the components are built in America. So they qualify for tariff exemptions and stuff like that. So that's specifically why they're up 15% of the day. But LiDAR, there's a lot of tailwinds for LiDAR, specifically from autonomous driving vehicles using LiDAR and drone defense systems capabilities. Hey, I'm a little behind. Hey, shout out to member Mike. What's up, dude? Good to see you, brother. And Jeff Mack, I hope y'all are having a great day. Plasma Looney too. So what's up? Oh yeah, hey, Burner, I forgot to get to that one. He says MYE. All right, let's do Meyer Industries. Okay, cool. Oh, and we'll get to Broadcom and what's up? We'll do ICHR after this too. Yeah. And Sam. So here's okay. Can we load, please? Myers Industries. Let me reset my app right here. Maybe my Wi-Fi is just slow today. I don't know. What was the ticker symbol? MYE. So here's Myers Industry. Wow. They're at a crazy all-time high today. So if you've ever bought this stock, you're definitely up on your money. And they're up 15% today specifically. There's got to be some sort of news, right? Trading higher after KeyBank raised its price target. Okay. Let's check out what they do. Whoa. So even though this stock is at an all-time high, even at all-time high levels, I honestly wouldn't sell this one because they're only trading at 26 times next year's EPS. I mean, they look really expensive at 50 PE trailing 12 months, but you very value them off a forward PE, and they're only at a 26 forward PE. Honestly, not too shabby. Let's see what they do specifically. So they do packaging and containers. Handling, manufacture, variety of plastics and metals. Well, let's go to their website right here. We can understand what they do a little bit more. Okay, they're trying to get my cookies, so Meyer Industries. Okay, we're gonna have to give them my cookies, so hit the like button. Yeah, investor relations. Can we learn about what they do? I mean, they don't have any pictures or anything. We serve 2 business segments within 10 dynamic brands. Well, anyway, they didn't make it clear enough. It offers tools, equipment, and supplies used for tire, wheels, and under vehicle service on passenger heavy truck and off-road vehicles. So I don't know, something like that. Well, let's go look at their financials. So the revenue growth doesn't look good. Like the lifeblood of the company, the sales are actually growing very slow, like 1%, 0.5, 0.1. That actually doesn't beat inflation. That is a little concerning. So and the net income just went negative. Yeah, very low. Well, it technically was a one-time adjustment. They actually made 24 mil this quarter. Huh. You know, nothing's blowing me away here, but I mean, the 25 forward PE, honestly, it's hard to. I would probably just stay away from this one, especially at this all-time high level. Looks like they missed on revenue. Whoa, they were expected 209. They only did 164. And the future forecast are down bad too. Did they like sell off one of their businesses? No. Huh. I get they are supposed to stay net income positive, 13 mil, 15 mil, and what's the market cap? Oh, so they're only a $1.3 billion company. Yeah, so that's why they're only at a 26 forward PE. Anyway, I would just be careful with that one. Six Star, what's up, dude? American Superconductor. Remember to get to American Superconductor next. Please reset that one in the chat. I want to get to Gosh, there's so many I need to get to. I apologize. Hey, I'm going to be streaming for another hour, so I'll get to Taiwan Semi, Sam, MQ, AVAV. Hey, what's up, Brian Paul? So here's Icor Holdings or something like that. They're also at an all-time high right now. So let's see if we can figure out. They design, engineer, and manufacture of critical fluid delivery subsystems. Well, that sounds niche. Revenue isn't growing too fast. I mean, it is down from 2022, but they're at a crazy all-time high. There must be some like data center tailwind, or maybe it almost looks like they're taking part of the memory shortage. You know what I mean? So, so they're in the semiconductor equipment industry. So yeah, they do fluid delivery subsystems for semiconductor equipment. Okay, so maybe they help with like water cooling, you know? Something like that, I don't know, is the preferred choice for integrated gas and chemical delivery solutions. We can view their products right here. So I guess these are some of their products that they sell to get a better idea. So the firm also manufactures precision machine components, weldments, and proprietary products used for fluid delivery systems. Well, there you go. They must just have some nice data center tailwind. Revenue growth is really good. Yeah, look at the left. The revenue is 239. It's going to grow all the way to 314. Yeah, the EBIT's supposed to like 3x. Net income is supposed to go positive as well. Because yeah, if we look at net income, they haven't made net income like ever. They've lost net income every quarter for the past like 8 quarters. But next quarter, they're projected to make 5 million and then make 9 million the quarter after. So basically, you're buying this company as they're getting net income positive for the first time. That must explain why the stock is doing so well. But I would not buy that one really after its huge stock price appreciation. You know what I mean? So American Superconductor. This one is interesting. So they're like a smaller semiconductor play. They're only worth $2 billion. So a $1.9 billion company. The 70 forward PE does worry me. What are the forecasts? Oh, so actually they had a one-time adjustment. So it says last quarter they made 117 mil. They didn't actually That was a one-time adjustment because on the EBIT was only 3 million. So it says they trade at 17 or 13 times PE right now. That's not true. They'd probably be trading at like 100. So they're at a 70 forward PE. All right. How fast is the revenue growing? So revenue, whoa, revenue's at a crazy record this quarter. That's really good. So I can see why they have a high multiple. So revenue hit 86 million. And on that 86 mil, they kept 4.5 million of net income on that. And they make net income every quarter, even excluding that one time. They're always making net income. You know, they used to lose money every quarter back in 2023. Now in 2025, 2026, they're finally making net income every quarter. Looks like they have a fortress balance sheet as well. And they just bought something last quarter for 75 mil. So a very interesting company here. Yeah, we're going to deny the cookies for them. So power protection, power supply, maybe they make PSUs or something like that. American Superconductor CEO puts AI data center growth in perspective. Well, interesting there. Anyway, some sort of provision of megawatt scale powered units include electrical control systems. Okay, well, should I answer that? Okay, well, sorry, we're not. Sorry, Jackson. All right. Actually, am I not on Do Not Disturb? Well, oh well. Oh my gosh. Hey, buddy, I'm streaming right now. Is it an emergency? Oh, I can't even hear you because I'm streaming. What is it? I'm streaming right now. Everyone's hearing you. What is it? Hurry. Okay. See ya. All right. Well, let's see what's next here. Oh, what's up, OLP Papa? I forgot. Hey, I'm not even reading the TikTok chat anymore. So if you're on TikTok, please go to YouTube. Just type into YouTube Nathan Robert, and I'll see whatever you have to say. But someone said Pump Stock. You know who owns Pump? I think it's the same person. Oh, I thought he owned this stock. Oh, he does. Okay. This is George Soros. He owns Comfort Systems. He's a smart guy. He owns GE Veranova, and he also owns Pump Stock. It's 5.7% of his portfolio. So let's deep dive into this company real quick. I put them on my watch list after analyzing them. And sorry, then oh yeah, Luffy, remember to get to Excel, and then I'll get to Broadcom and AVAV. Oh my gosh, I'm so behind. I'm sorry. So here's ProPetro Holdings. I forgot what they do. So they're headquartered in Texas. What it is? So what do they do? So they do for the oil and gas industry, provides hydraulic fracturing and other complementary services leading to upstream oil and gas exploration. So interesting there. Let's see what they say they do specifically. An oil field service company in hydraulic fracturing and other complementary services. Huh. Well, let's just go look at their financials. They've had a great little uptrend. Maybe they're part of this like oil crisis. So if oil, keeps going up, maybe that should benefit this company as one who services a lot of oil and gas people. So hydraulic fracturing, that business doesn't look like it's doing so hot right now. It looks like it's down 33% year over year. That's after it fell 12%, after it fell 7%. So that part of the business is struggling. What about wireline? Okay, that one is growing double digits, up 15% year over year. Cementing is down 24%. Power generation, oh, this is like a new business for them. Anyway, I don't like to see that their main business is struggling, because when we combine all the businesses together, we can kind of understand why this stock, when we zoom out on the monthly and the weekly, is kind of the same price that it was in 2017. Yeah, this stock has done nothing since 2017, not even paid a dividend. And I can see why now. The fundamentals are deteriorating, so the growth is negative, and that's one thing you want to be cautious of, And it looks like they're a little choppy on their net income too. Like for the past year, they've lost net income for the year, so. Maybe there's a future growth story though. I probably should have looked at the future projections. Whoops. So what's up, Paul? Well, what do I want to, wait. Actually, we already looked at Paul, hey man, I know nothing about stocks, but I had dinner with your parents on a cruise last week. They told us about you, so I subbed. I will be back to check on your comment. Really? Wait, I don't believe that. What? I don't think my parents were on a cruise, my mom was somewhere. I don't know where my mom was, but, she was teaching a class somewhere. But hey, if my mom well, hey, thanks for showing up. I greatly appreciate you showing up to the stream. What's up? Yeah, hey, we're just talking about stocks. No way. All right, so next up is MQ. So, actually, let me do Sam first. What's up, Jeff Mack? Shout out the member. He said Sam stock. Is that Boston? I can't really talk about this industry, but apparently people are drinking a lot less. I guess younger people are focused on health and stuff now. Maybe GLP-1 stuff will struggle with the alcohol industry. but they're trading at only a 17 times next year's PE ratio. So they produces and sell, yeah. And honestly, the whole consumer food industry is struggling right now. So if we go to the lifeblood of the company, the revenue fell and declined 4.3%. So but that's a huge downtrend, to go from 1,200 to $179 in just 3 years. Geez, that's a nasty downtrend. And they're kind of struggling with net income positivity. Yeah. It's like they have 2 quarters where they make money and then they lose money the other half of the year. Yeah, I would be cautious with this one. The 17 forward PE does look decent. My favorite alcohol stock is TAP. This one is also on a massive downtrend, but I love its financials. It does insane buybacks, really good dividend. But they're also, actually the growth came back. Revenue's green 2%. And they consistently make net income every quarter. So, here's basically the before adjustment number. Basically, I really like TAP as well. I literally never heard Nathan get a notification, much less a phone call. History was like, yeah, dude, every time someone called that person, he's on my favorite list. So even if I'm on Do Not Disturb, his call still goes through. Someone said AVAV stock. Yeah, let's do it. There's a big copper tariff meeting today. Any US-based copper stocks you like? Yo, FCX, and honestly, Amphenol is a decent one, but FCX, Freeport, this is the best copper commodity. They're headquartered, in Phoenix, Arizona. If you like the commodity copper, this one's a really good one. But I like the companies that turn copper into actual things like Amphenol and Corning. They're cool. So here's AeroVironment, AVAV up 17% today. Net loss due to goodwill impairment. Okay. So they reported earnings, it looks like. Is there any other? What is this article up here? I guess there's some, we'll check out the earnings right after we check this out. AeroVironment says next big opportunity isn't building drones. Stock pops 21%, says we're just getting started. So expanding manufacturing ahead of anticipated demand, believes counter drone systems could become the next major growth engine. I've been saying that, drone warfare, we're going to need drone defense systems. So anyway, let's go look at their fundamentals here. So they do autonomous systems, which I'm guessing is drones, and space, cyber, and directed energy. Oh yeah, I remember looking at this company's website. So yeah, they sell these directed energy. What the heck? The video went down or something. Oh well. Anyway, this is their directed energy weapons. They do it. Basically, it's a defense company. Let's go see if they're profitable or net income forecast. So the net income does look choppy, but revenue or net income, they're supposed to lose 15 mil next quarter, lose 3 million the quarter after, but they were supposed to make 30 mil. They did 60 mil this quarter, and it was a good beat. So if we go to revenue total combined, they've had great revenue growth, mainly from an acquisition. But yeah, revenue grew 143% year over year, after it fell 10%, but then they did the acquisition this quarter. That's why the balance sheet changed out of nowhere so quickly, because of that $1 billion acquisition they did right here. So nice triple-digit revenue growth. They're still just kind of struggling with net income positivity. It looks like they lost 240 mil this quarter. It hasn't updated here yet, but anyway. Issues 2027 guidance below consensus. The stock's up 13% on the day. So funded backlog stands at 1.2 billion, up 65%. So they do have a nice backlog. Interesting. Best energy play? In my opinion, it's CEG, Constellation Energy. This is specifically the best nuclear play. If you're a fan of nuclear, I believe nuclear is the future. CEG is the best purest play. They own legit over 30% of all the US's active nuclear reactors. There is no close second. It is the purest play. They only traded a 21 forward PE. You get a 0.7% dividend yield. And I love them so much that I decided to own them. So full disclosure, I do own this one, but I own them for a reason. I've looked at every utility stock out there, and this one has just the best fundamentals. They print net income and do buybacks, do dividends, best nuclear assets and geothermal assets and natural gas assets. So, and our actual natural gas bill is through them. That's how I found out about the company. Then I found out about their nuclear assets. So yeah, and then we get little dividends. I know $6.40 isn't much, but in 10 years from now, what will the dividends be? And you're mainly buying them for the stock price appreciation, not the dividend. Nobody has beer money. Hey, what's up, Iron? What's up? Can you cover TSM? Yeah, what's up, Matt? My bad there. I meant to get to this one. Yes, sir. And then we'll get to EXEL and Gosh, I'm so behind on the chat. Sorry if I missed anyone's stocks as well. But feel free to re-say them. It's not spamming. So here's Taiwan Semiconductor right here, a phenomenal stock I wish I owned. It's almost like the picks and shovels AI play because NVIDIA just manufactures their chip. Or no, NVIDIA just designs the chips. Apple just designs their chips. Taiwan Semiconductor is the one who actually manufactures them. Their number one customer is NVIDIA. Their number two customer is Apple. And they're raising prices. Let's see if there's any news. Yeah, Taiwan raises wafer prices by 5 to 10% across the 3 nanometer, 7 nanometer nodes. Anyway, their fundamentals explain why this stock is at an all-time high. They're not just at all-time highs on momentum around AI. It's genuine fundamentals improving, and I see this stock continuing to climb higher. So if I was a shareholder, I wouldn't sell. So check out the revenue. Revenue grew 40% year over year to a new record. And look at the revenue. It was 35 billion. On this 35 bill of revenue, they kept, after paying taxes, 17.9 billion. That, and if we zoom out, that is the most profitable quarter they've ever had by far. And that, if you notice, the net income grew faster. That means they have a 50% net margin. Look at that. So for literally every $100 that comes in, they keep $50 after tax that goes straight to the bottom line. And look at the margin expansion. Net margins are up 17% year over year. How about free cash flow? Yeah, they're printing free cash flow. And check out the forecast of the net income. I bet you're wondering, like, hey, this quarter was record net income. Is it done? Are they done here? Is there room for them to continue to climb? Analysts think so. They're going to hit 19 bill next quarter, 21 bill in net income the quarter after. So that's why you value this one off next year's net income. And when you do that, you'll find Taiwan only trades at 27 times forward PE. That's like an S&P 500 multiple for a company with 50% plus margins, growing revenue 40%, net income 65, expanding margins, and future forecast. 27 forward PE honestly seems reasonable. Like this is not peak bubble valuation. You know what I mean? This could easily stretch up to like a 33, 35 forward PE before it maxes out and send us up another 40, 50%. I wouldn't be too enthusiastic about buying at all-time highs right now, but I definitely wouldn't be selling. Plus, you get a nice dividend, a 0.7% dividend yield. Morningstar says they're reasonably valued. Robust demand for high-performance computing and artificial intelligence combined with unparalleled dominance in advanced process nodes will drive long-term value growth. Like, there's a manufacturing shortage. That's part of NVIDIA's moat, is having the supply agreement with Taiwan Semiconductor. Like, Taiwan would accept new customers, but they literally just can't. Anyway, they're great. And with also, there's a new, like with the memory shortage that also trying to bring manufacturing, they manufacture that too. So there's just a lot of tailwinds for that company. Great fundamentals. So, hey, what's up, Rolando? Says INFQ. Let's do it. INFQ inflection. Thanks, bud. Have a great rest of your day. Hey, you too. This a stock trading stream? No, we're mainly just like analyzing stocks. We're looking at stocks we think will be great multi-baggers. Basically, how I like to approach the market is, you know, I would pick and choose like great individual stocks, and these, like literally doing the boring strategy of picking high quality stocks can get you better results than the day traders, the option people, the crypto people, by just buying and holding high quality growth stocks. I believe it's one of the best, most boring strategies, but also gives one of the best performances. And it's the most like, if you buy companies with good fundamentals, it's like not even risky. And other people are like doing options and stuff. So anyway, here's INFQ stock inflection. They're a quantum company, I believe. It's one of the companies that got part of the quantum money from the US government, but there is some issues here. Oh, no analysts cover this stock either. So they just IPO'd not that long ago, and the revenue's not much. I mean, 9 million of revenue this quarter, and on this 9 mil of revenue, they actually they lost $30 million. So, you know, to value this one at 2.9 billion on a company that still loses money and 9 mil revenue a quarter, what's the growth actually? I guess it's supposed to grow to 11 million, but still, it's a tough future to pay for fundamentally. But this is a quantum company, and all these quantum stocks have had crazy momentum. But yeah, I would be very careful with this one. There is no forward PE. There is no free cash flow. Like there's nothing really to judge this company on. And I just can't get to its current valuation, sadly. But that being said, oh, they have a really good balance sheet. Looks like they just fortified their balance sheet after the IPO fund. So they have no debt. Okay, that does take some risk off the table. They got no debt and 440 mil of cash. Actually, hold up, with no debt and 440 mil of cash, that puts around like 15% of the market cap is just cash. So 15% of what you're paying is literally their cash on hand. But I assume that was shareholder dilution. Yep, they diluted every shareholder by $500 million to do that. Oh my gosh. That was kind of smart because they know the stock's overvalued, but definitely a risky one. And there's a ton of stocks on the dip. Like Microsoft has such a great quantum computing business that like Microsoft also has the money and the talent to be the industry leader. You just pick up Microsoft. What is this right here? Micron and Apple trade blames as price soar on laptop phones and more. Oh yeah. Anyway, yeah, because of the memory shortage, Xbox prices, phone prices, most consumer electronics are going to go up. Hey, what's up, General? Dude, good to see you, bro. Shout out the member. Let me do I'm a little behind here, so let me go quick with some of these. Let me do EXEL, then we'll do MQ and MPTI and some of these other ones. What's up, Top Man? Yeah, we'll get to LEU as well. Thoughts on nuclear enrichment as a play for nuclear? Yeah, we'll talk about that with LEU and Solstice after this. So here's Exelis. This is a prescription company. At one point, I actually owned this stock in my Roth IRA. Regrettably, it looks like I regret selling out of this one, but yeah, they're at like a new all-time high today. Congrats if you own this one. Look at this. They're only at, even at this all-time high level, they're only trading at a 16.6 forward PE. That's how you know a stock will most likely just continue to climb higher. Like even at this all-time high level, the valuation can still expand to like a 20, and it wouldn't even look that expensive at a 20 forward PE. But anyway, most of the revenue comes from this one prescription right here, Cambotex or whatever. Oh, it looks like they also collect basically royalty licensing revenues. But check out the forecast. Revenue is supposed to grow to 660 mil, and they're going to make, and on that 660 mil of revenue, they're going to keep 207 million of net income after taxes, assuming they just meet the expectation. If you notice the blue line, they always beat on net income every quarter. The blue line's what they expect, or the orange line's what they expect. The blue line's what they actually report. So they're crushing on net income. So they'll probably continue to beat on earnings. That's why the stock is at an all-time high. They beat on net income projections every quarter, and they still have good future projections. And they're only at a 16 forward PE. They're on my watch list. They definitely have the DNA of like a multi-bagger. So speaking of nuclear enrichment, so yeah, companies like LEU. So here, we'll start with LEU part of the supply chain. If you're a fan of nuclear, you know, uranium is what fuels nuclear plants. So LEU, they basically get the raw uranium, the low enriched uranium out of the ground. And I like LEU specifically because I've looked at a ton of uranium stocks. All of them like aren't consistent with their net income. This company every quarter makes net income. It's not, there's not a negative net income quarter. It's always consistently positive. You know, they're supposed to make 20 mil next quarter, only 2 mil the quarter after. So that's why you do still want to be cautious, because a 60 forward PE is expensive. But this one out of all the new ones are really quality. So that raw uranium, that yellow cake uranium, then goes to Solstice right here. This company's fascinating, actually. They were a spinoff from Honeywell. So check out this middle, or the line at the very top here. Solstice legit owns the only uranium conversion operation in the US, the only one, which will see higher sales from growing nuclear power generation in the coming years. So the raw uranium goes to Solstice to be converted into nuclear fuel. So pretty cool. And then you can buy CEG as the one that actually owns the nuclear reactors. They own over 30% of all the active nuclear reactors in the US, and they're only at a 20 forward PE. That's my favorite one. So, Topman LEU supplies CEG. Very cool. So yeah, LEU, someone said, provides actually for Constellation Energy. That's awesome. Wait, did we look at MQ yet? Let's look at Marquita stock, Marquetta or something like that. Then we'll do Broadcom and MPTI, or MPT after this. So here's Marquita stock. Dang, if we zoom out on the weekly, they're kind of near this all-time low level. So they're even doing a 1-for-4 reverse split. Yikes. So what's the revenue? Do they have revenue? They do. It is kind of down from 2023, but it is recovering and it is growing 19% year over year. And they just got net income positive. So they made 2 million of net income this quarter. They didn't make 7 mil. They technically had a little adjustment. So they made 2 mil in net income this quarter. That's like the first time they've made real money like ever. If we zoom out, like they always lose net income. What are the forecasts? And they're supposed to stay net income positive. So they're going to make 500K next quarter, 2.5 mil the quarter after. So they're supposed to stay consistently net income positive from now on. But that being said, yeah, $1.7 billion company. Revenue's not what it was in 2023. And maybe it could be hurt by AI. I don't know. Yeah, they had to leverage up their balance sheet a little bit. So some software, modern card issuing platform. Huh. The card issuing platform built for credit. Okay. So it looks like Uber, Klarna, they have some partners. Huh. So I don't know if this is like a commoditized industry, like maybe whatever they do, another bank can do, or Yeah, I just don't know. So, but definitely maybe something to look into. But I know a lot of fintech stocks are struggling, like SoFi is struggling bad too, and that might be because of Bitcoin. SoFi actually, let's overlay SoFi's chart. I bet it looks identical to this chart actually. It does. Hold up. So where's the compare? I forget how to do this. Oh yeah, overlay will add SoFi. So kind of a lot of these fintech stocks are struggling. Yeah, I mean, not perfect, but they're both on like this, downtrend. Anyway, I don't know about that one, but the growth is coming back. So let's do MPTI. MPTI. So this is Mtron Industries. Whoa, I have never heard of this stock before, and it's at an all-time high. This looks interesting. So Mtron Industries, so they do electronic components. So I can see why this stock's at an all-time high. I bet, electronic components may be used in data centers. So they're headquartered in Florida. So Spectrum and Control Solutions, low pass, high pass, duplexer, and band stop. So frequency controls. So let's go to their website right here. Let's maybe understand what they do. Engineering that elevates performance, innovation that powers precision. So maybe they do stuff that is on satellites, pilot communications, navigation, radar. Oops, I clicked off their website right there. Very interesting business here. To find products, please cert. Interesting here. Awarded $7 million contract for major counter-drone radar programs. So maybe they're a defense play too. Pretty interesting. So let's go to their financials, see how they're growing. So revenue's at a record this quarter. That's what you want to see. So this stock isn't just at all-time high from momentum. The fundamentals are genuinely improving. So revenue's at a record this quarter. And again, it's not much revenue. It's 14.4 million. But notice on this 14 mil of revenue, they kept net income on that, 2.4 million net income. And that's real after they paid a couple $100,000 of taxes. So that means their net margin is a 20% net margin. Not too shabby. Oh my goodness, dude, this keeps getting better. I'm definitely putting this one on the watch list. They even have no debt. Completely debt-free company, 51 mil of cash, making net income every quarter. What's the market cap? So yeah, it's whoa. Out of all the companies worth $420 million, because that's a micro cap, $400 million company, I want to buy the one with no debt, making net income every quarter, and the one where the revenue just hit a new record. Very impressive here. So, there's a lot of $400 million micro caps. I can see why this one's at an all-time high and done so well. Has one of the best fundamentally small caps I've seen. Oh, dude, hey, I forgot. Hey, what's up, Isaiah? I'm actually ending the TikTok stream right now. Hey, please go to YouTube. The only way to join my Discord is to go on to YouTube stream. Just type into YouTube Nathan Robert and you'll find it. Actually, you've donated so much, like well over $1. I'll give you, actually, I'm going to DM you later with the link. So basically to join my Discord, you have to pay $1. It's just basically just to prevent bots. Or if you become a YouTube member, you get permanent access to my Discord as well. So even if you cancel the YouTube membership, you get permanent access to the Discord. I'll DM you later, Isaiah. Also, please go to YouTube because I'm actually ending, or I'll end the TikTok stream in 5 minutes, but please go to YouTube Nathan Robert. TikTok removed my For You page eligibility and the viewers just spiraled to zero. So it's unfortunate, but if we restart the stream, it fixes it. All right, next up here. Hey, what's up? Yes, sir. Honeywell. Yeah, Brian Paul, we can check that one out too. I went to get to Broadcom. Broadcom, I've been wanting to get to that one for a little bit. This is yeah, what's up, Paul and Tom? Yeah, Broadcom is looking cool. And Rubes. Yeah, we had a bunch of people saying Broadcom. Okay, cool. So Broadcom is a great semiconductor play. They're on a little bit of a downtrend. They gapped out on earnings because of a small little miss in future shipment projections. And Broadcom is actually partnering with OpenAI to develop their own chip. So basically, Broadcom helps companies make their own chips. So there's some reports emerge of potential Google shift from Broadcom to MediaTek for TPU supply due to technical delays. That wouldn't scare me, but basically, Broadcom helps people build their TPUs. They're helping OpenAI build their TPUs and Google. So they help people make chips. And if we go to their semiconductor solution business, which is 67% of the revenue, it's so fast growing. It's up 78% year over year to an insane new record. Like the growth rate's growing. I don't see any other 78% growth rate on the entire screen. So Broadcom's semiconductor revenues at a record. And check out the forecast. In 2 quarters, analysts are projecting 15.4 billion of net income. Net income has never been close to 15 billion before. There is still so much future EPS and net income growth for Broadcom to come. So that's why you really value this one on a forward PE on next year's net income. And when you do that, they look very fair at a 28 PE, forward PE. Like they look expensive on a trailing 12 months basis, but you don't value them off the trailing 12 months PE. You do it off next year's forward, and they only trade at 28 times next year's PE. That's why we're not in some peak bubble valuation. That seems like a reasonable valuation. Morningstar says they're undervalued. A commanding market leadership in custom AI chips, surging infrastructure demand from cloud hyperscalers, and highly recurring cash flows from deeply embedded enterprise software will drive long-term value growth. I didn't even mention the VMware software business that's growing so fast. Check out this business on the annual basis. Like 2023, it was 7.64. 2024, it was 21 bill. Now it's 27 bill. Like the growth rates the past couple of years have been nuts. And again, these just net income forecasts are beautiful. And that's real. Like before taxes, they're going to do 23 bill. After tax, they're going to do 15.4 bill, which will be a record. Anyway, I love Broadcom. Pretty cool. And they print free cash flow as well. What's the best stock to buy now, says Joey? Palantir, Iris Energy, or is there other you like instead? Well, out of Palantir, Iris Energy, I definitely pick a Palantir right now. But here, personally, the stocks I've been buying, and actually one stock I did just sell is, I didn't fully sell out, but I trimmed another share of AMD. AMD is nearly in the $1 trillion market cap club at 108 forward PE. It definitely makes sense to trim a little bit. And I used the cash to buy some new stocks. So here are the new companies that I bought. Some of these I don't know if I'm going to keep forever. Specifically, well, the only one I might sell a CF because it's so commodity based, but I love Moeller Industries. I just bought them. I just bought Rollins today and Netflix. Netflix I've been buying at this price. Netflix at this, I bought it's $72.58 today. Yeah, I was buying at $72.29, or that's where I was lowering my cost basis. I'm not going to buy any more Netflix until it falls. I bought at 72. I'm only going to buy more at like under 60, like 8 or something, I'm only going to buy more once it falls 5 to 10% more. And if Netflix doesn't fall 5 to 10% more, and this is the permanent bottom, then GG, I'm happy because I still got 10 shares, you know what I mean? But in this market with the high volatility, and you want to have that more disciplined approach where if you want Netflix eventually is 5% of your portfolio, don't make it 5% of your portfolio today. And it's kind of smart to have a little bit of extra dry powder on the side, don't have no cash. So yeah, we do still have $400 of cash. We'll be allocating more, especially, actually I bought another share of Moeller Industries today. I originally bought at 129, just bought another share at 121. So pretty cool company there. I'm actually going to do a whole video soon on Moeller Industries. I hope they're like my next Powell Industries. This is my first, well, it's almost at 1,000% return, but we're up 988% on that one. Next up, let's see. I am a little behind. Brian Paul says Honeywell, let's do it. So they've been very volatile these past couple weeks. I know they're like spinning off a bunch of their businesses. Yeah, look at this. Honeywell's completes aerospace business spinoff and implements a stock split. So also remember the company we just looked at, Solstice, the only like nuclear conversion site in the US? That was also a spinoff from Honeywell. So I'm not sure what Honeywell's doing. Or maybe the thesis is they'll spin certain businesses off and they'll trade a higher multiple separately. And that's exactly what Solstice did. Actually, they're genius for splitting off Solstice because it creates more shareholder value by splitting the companies in two because both of them separately trade at higher multiples. So maybe that's the thesis. Morningstar says they are overvalued though. Do they have real research on this one? Here's, I guess, what the bulls and bears are saying. The spun-off aerospace business segment displayed strong counter-cyclical characteristics. Honeywell Technologies' remaining portfolio risk outsized operating income declines in economic downturns. So that's, I guess, one of the bear cases. But look at this forward multiple. They're only trading at 19 times forward PE. When I think of Honeywell, like I have right next to me a Honeywell fan. Like it's a tiny fan that it's just a fan. I guess Honeywell makes fans or something. So they have a 2% dividend, nice 2% yield. I like their aerospace business, but I guess that's going to be trading under a separate ticker symbol now. Yeah, I love the aerospace and defense industry. Anyway, I don't know about this one. I don't know what I'm left judging. Like, I don't know what business is left because I guess they're doing building automation, process automation, industrial automation is their other business. Anyway, maybe one we'll look more into. MPTI made it to the watch list. I'm proud. Hey, General, dude, I've never even heard about that one until you said that. Thanks for that one. MPTI did dilute by 29 mil. Yeah, that's why I suspected when we looked at their cash pile right here, I almost bet that was the case. Because look, we saw their cash. It went from 20 mil to 52 mil out of nowhere. So they diluted shareholders by 29 mil. You're right there. Which is a big chunk of a $420 million company, but at least they diluted at all-time highs, and the stock isn't being punished. The stock's still at an all-time high. Let's see what's next here. Um, what stocks? Uh, I like CELH. I also, oh, let's do Celsius stock right here. All right, yeah, I'm ending the TikTok stream. Hey, please go to YouTube if you're on TikTok. Just type in YouTube Nathan Robert. Sorry, TikTok's giving me such issues. Okay, so here's Celsius Holdings right here, a great energy drink play, caffeine, like ready to drink company. They're basically a smaller Monster beverage. So they own Celsius, which is really popular now. They own Alani, which I see all over college. Everyone drinks Alani's. And also they own Rockstar Energy. So you really value this one off next year's PE because they had a total one-time adjustment. It says they traded 68 trillion 12 months PE. They don't. They're actually at like a 24, but one-time adjustment. But they're trading at only 7. That's how you know it's a one-time adjustment because the forward PE is only a 17.5. So you only trade at 17 times next year's net income. That seems very reasonable. Morningstar even says they're undervalued. Its strategic expansion through PepsiCo partnership and its diversification with the Alani acquisition will drive long-term value growth despite a highly competitive industry. You know, drinks are the most competitive, industry ever, but look at the profits the past 4 quarters. I mean, they're making like over 100 plus mil a quarter. And so before tax, they made 143. After tax, they kept 110 mil. Again, it says they lost 60 mil. They didn't actually. It was a total one-time adjustment, moving their distribution to Pepsi. So they had a one-time gap termination fee, which the core business made 160 mil that quarter. So don't worry about that. Anyway, a 16 forward PE honestly seems pretty fair. Or a 17.5 forward PE seems really fair. So yeah, if you're a fan of so they sell these drinks right here that have like zero sugar, usually like 200 milligrams of caffeine or something. Hey, these look pretty good. I actually just had a Celsius the other day. So anyway, one that the whole industry is kind of struggling. Well, not Monster, but like if we just look at any food stock, like a General Mills, a Campbell's Soup, or just any food stock, they're all on this massive downtrend. Even like Wendy's, McDonald's. I feel bad for these quick service restaurants right here. Like Wendy's is lower than their 1997 IPO. If you bought Wendy's in 1997, you're down 40%. So, McDonald's isn't immune to that either. Yesterday I bought McDonald's. I bought the very tiny amount. I just had a little bit of cash. I bought 0.1 share of McDonald's yesterday. So yeah, we're down 4% on them. Out of all the food stocks to buy on the dip, honestly, Celsius and McDonald's are 2 of the best in my opinion. Next up, and I've been very impressed with one company, Monster. Dude, look at Monster Beverage. They're at a crazy all-time high. I suspect like if Monster Energy's doing super good, Celsius should be doing good. And I bet they are. It's just the Monster doing good as well, because we shouldn't really compare Celsius to like General Mills and Campbell's Soup. We should compare it to Monster. And anyway, I'm bullish on them. I also own the Monster bottler and the Coca-Cola main bottler, Coca-Cola Consolidated. I love this company. I think they've been a multi-bagger. I think they're going to continue to do well. They just bought back, you won't believe this, 27% of the whole company on one day. They bought back legit 22% of all shares that exist in just one day. That was a few months ago. So GFS, this is Burner Mill. Hey, what's up, Dark? Thanks for coming up to the YouTube stream. So Global Foundries, I guess Yahoo Finance is wrong on cash. Hey, Rubes, yeah, I don't know what stock you were talking about there, but yeah, we have the S&P Global data. So if it says like 50 mil of cash on this app, it's probably right. Because I've looked at Yahoo Finance and sometimes stock analysis numbers, they don't always use like gap metrics. Anyway, here's Global Foundries, all-time high, pretty much, in the IPO in 2021. So if you've ever bought this stock, you got to be up on your position. Let's see what they actually do. What does this say? Morningstar says they're a little overvalued, while surging demand in automotive and data center specialty chips provide real growth opportunities. The company's lack of economic moat and significant structural cost disadvantages may pose as some major risks to the long-term valuation here. So manufacturing service, or let's go to their website right here. Global Foundries, interesting here. So maybe they do advanced packaging. So energy efficient bonding and something complicated, quantum future depends on volume manufacturing. Anyway, this company seems that they're having a lot of tailwinds, so I guess from chips, quantum, maybe even automotive industry. But when we go to a forward PE here and we do a forward PE, a 54 might be a tough buy today. I mean, it's at all-time highs for a reason. But I did notice the revenue growth did look questionable. The net income is good. Look at the forecast. They're supposed to make 173 mil next quarter, 209 million of net income the quarter after. Huh. So it looks like the revenue might not be as growthy as we thought, but the net income is. So they're still net income positive. Yeah, here's the net income every quarter. What's the margin on that? 10 to 12% margin. I don't know. It looks like they're also having a little bit of a decline. I don't know. Definitely want to do more research on. I'd definitely be cautious at this all-time high level because I don't know if they have any real, like, the revenue's doesn't look like it's growing in the net income. And I don't know. Actually, there is good revenue forecasting. But nothing's really blowing me away there at a 54 forward PE, but definitely some AI, like, picks and shovels play maybe with the manufacturing of chips or something. I don't know. Okay, next up here is SoFi. Yeah, I've been wanting to get to SoFi stock. So this is a stock I do own, by the way. I suspect they're on such a massive downtrend because of crypto. I know SoFi has like a SoFi USD card, and their brokerage gets some money from crypto transaction stuff. But Celsius is genuinely one of my favorite growth stocks to buy on the dip. And I actually bought them. Well, not I bought one share more, but I bought another share at $15 because I'm raising my cost basis because I'm already up like over 100% on SoFi. So when I buy more shares, it lowers my cost basis. But I don't mind raising my cost basis because I believe current price of SoFi is pretty fairly valued. And even when we do a forward PE, they're at a 25. That's like an S&P 500 multiple, 25 times next year's PE. That, for the growth they're experiencing, is undervalued in my opinion. So let's go to their main business, lending. That's half their revenue. That grew 55% year over year. Look at that pop up the most recent quarter. That's the fastest growth rate on the entire screen. So the growth rate's growing. Lending revenue's up 55. And the other half of the business, this financial services business, that grew 42% year over year, after grew 101, after grew 85, after grew 244, after grew 264. They're just on an incredible streak of growth, and that's why I believe they deserve more than just a 25 forward PE. Again, if we go to revenue right here, revenue hits a record by the quarter. Not just by the year, but literally every quarter, the revenue hits a new record. Revenue is up 42% year over year. And this is organic. Like, they didn't acquire a company, and this isn't some like inorganic growth. This is organic revenue growth. Revenue's up 42, and not just making revenue, making net income. They're net income positive. They made 166 mil in net income this quarter, which actually was a 15% net margin. But check out the future forecast. They're supposed to make 237 million of net income in 2 quarters, to a new record. So there's still a lot of net income and EPS on SoFi still to come. That's why we're valuing them on a forward PE basis. Morningstar says they're fairly valued. It's unique, full service. Oh yeah, they got their own banking charter through a loophole that's now patched because of them. They're incredible. Its unique full service digital banking model drives significant cost advantages and switching cost, but elevated credit risk exposure and reliance on capital market demand for loan sales warrant caution. So yeah, what they're saying is back here, they diluted shareholders by $1 billion, or actually, I don't think it was $1 billion, but they diluted shareholders by like a small percent of the market cap. But that's just kind of what SoFi does. They dilute shareholders and then they lend out that money. And that's how the lending business grows so fast. So really, you want to look at an EPS. This is earnings per share. So yeah, net income. So whenever they issue shares, there's net income and then there's net income per share. The per share metric is what you want to look at, because if there's more shares that exist, EPS accounts for that because there will be less net income per share. So EPS factors that in. And even still, the EPS is going to grow to 17 cents in 2 quarters. Like, it's negligible to what I'm trying to say. There's still the EPS year over year is literally going to go from 11 cents to 17, which is like a 50-60% increase. So anyway, they're still great even with the small dilution, and they haven't diluted in a long time. They were smart and diluted shareholders way up here at $30 plus a share. Now it's 18 a share. They could buy back their own shares for cheaper. What happened with CEG? Have you sold any in the last 6 months? Absolutely not. What's up, Mike? So they're just on a downtrend right now. Apparently, like the regulators are trying to regulate like how much they can raise prices, which I don't even know if they can do. But that's kind of the bad news, is that they might have some regulatory issues. But at a 20 forward PE, I am not worried at all about CEG. This is like a stock where I know it's on a downtrend right now, but I almost promise if you just sit and just don't sell, you don't even have to buy more. I would just hold on to my shares and you'll be happy you did in a couple of years. I think they're going to be a great one for the long run. My favorite utility company. And I think they're even going to sign some new big tech client deals. So next, like they just did one with Walmart that didn't send the stock up. I was surprised. All right, so next up, GCT seems like a really solid company to me. What is that one? GigaCloud Technology. They're actually on my watch list. I haven't looked at this stock in years. Huh. Let's check this one out. What about streaming service stocks? Oh, like Netflix. Yo, we just bought some more Netflix. I really like Netflix. Hey, we'll look at CRDO. What's your view on crypto right now? You know, I'm not buying any crypto or Bitcoin until MicroStrategy goes bankrupt. But crypto, it's hard to be bearish on it. And my way of playing crypto, instead of just buying, Bitcoin indirectly, I've just been buying like SoFi, Robinhood, like the crypto beneficiaries, where whenever crypto goes up, these brokerages like also go up. So anyway, here's GigaCloud, because so much of the revenue comes from crypto transaction fees. So, but maybe we'll check out. And yeah, here's real quick. Here's Bitcoin right now. Bitcoin has actually underperformed all traditional assets the past 5 years: gold, silver, S&P, and by a wide margin too. So I was reading some, like, the majority of crypto investors are actually now negative. Like, the average person who owns crypto is actually negative on their crypto position. So, yeah, there's also a lot of this is because of strategy. There's the prediction markets. The last time I checked, which was like a week ago, they had over a 10% chance of going bankrupt. And yeah, strategy holds 850,000 Bitcoin worth 50 billion, and its average cost basis is 75,000 a share. Well, Bitcoin's at 58,000 a share, and they can't. It's tough because they can't issue shares at this low level, and they have to sell Bitcoin to fund this dividend. People are calling it like a dividend Ponzi scheme. This STRC, this is their dividend thing, and they have to pay out 1.7 billion of dividends a year, and that's mainly funded off crypto selling. And how are you going to sell crypto at this all-time low level with a huge unrealized losses? And there's all this stuff. So I don't know about buying MicroStrategy or Bitcoin yet. All right, so here's GCT, GigaCloud Technology. I forget what they do. I haven't analyzed them in so long, but something impressed me because they're on my watch list. That's a very cheap valuation, an 8 PE and a 7.5 forward PE. So only trading at 7.5 times next year's net income. So off platform, I don't know what that is, but whatever that is, it grew 58% year over year. Holy schmoly. That's the fastest growth rate on the screen. They're also in GigaCloud 1P, last mile delivery service, warehousing services, package services, ocean transportation services. So they're kind of like they're in a lot of different industries here. So they're headquartered in California. So they do B2B electronic e-commerce for parcel merchandise. So maybe they are like a logistics play, something like that. Looks like they have my dark setting makes this hard to read, but it looks like they have 12,000 buyers, 1,300 sellers on their platform, whatever. Interesting there. So the firm does transportation solutions from the manufacturing warehouse all the way to the end customer doorstep, all in one place. So interesting there. And maybe it's a commoditized industry, like a UPS also trades at a very low multiple. A FedEx trades at a very low multiple like this. Maybe Amazon is a better play. I don't know. But their main, what was this off-platform business is growing very fast, up 58% year over year. 66% of revenues in the US too. Interesting. And they're supposed to stay net income positive. They're going to make 33 mil next quarter, 36 mil the quarter after. And notice, like, they beat on expectations every quarter. So if they beat the past 3 quarters, maybe they're just going to continue to beat on earnings in the future. And it's hard to be bearish at an 8 forward PE. Maybe it's just a commoditized industry though. So yeah, what's up, MG? Yeah, we'll get to CRDO stock. This is a great AI infrastructure company. All their competitors like Amphenol, Corning, GLW, they're all at an all-time high right now. And same with Credo Technologies. They supply copper and fiber optics for NVIDIA. So this stock, if we look, it's at a near all-time high right now. They totally deserve it. Usually when you look at a stock, they're at an all-time high for a reason. And I think you'll be able to see the reason. It's pretty clear. If we just zoom out on their revenue's at an insane record. They've had triple-digit revenue growth for the past 5-6 quarters in a row. So revenue was 437 million, and not just revenue, but net income. If we go to net income right here, on this 437 million revenue, they kept after tax and net income 169 million, the most profitable they've ever been by far. Triple digit net income growth rates, that's faster than the revenue. So that means pricing power. That means margin expansion. Net margin went from a 21 to a 38. So basically for every $100 that comes in, they keep $38 after tax. And another huge, safety net is the fact that they have no debt. Man, I wish I owned this one, but I'm happy with Amphenol. This has the DNA of a multi-bagger. I can totally see why it's done so well. revenue's at a record, net income's at a record, margins are at a record, no debt, cash piles at a record, free cash flows at a record. They're at all-time highs for a great reason. Is there any news? Citing raises price targets, citing AI infrastructure growth. And 10 growth drivers include active electrical cables and optical producing, including the zero flap transceivers and dust photonics, photonic integrated circuits. Customer base diversifying include Amazon, Meta, Microsoft, XCI, and Oracle. They're all customers of Credo. I believe they're headquartered in the Marshall Islands, though. Let me double check. Yeah, no, the Cayman Islands. So part of the reasons their net income is so high is because they've actually never paid taxes before. It's because of where they're headquartered. So they're headquartered in the Cayman Islands. And so when we go to their tax rate, their net tax rate is a 0.1. So basically they pay no taxes. That's part of the reason why their margins are so good. When we have other like US companies, have to pay the 21% corporate tax. Yeah. Anyway, Amphenol, the whole industry is doing great. This is my play for the same industry. APH, GLW, they've all done great. So what about streaming service stocks? Well, obviously, I love Google. Google owns YouTube, YouTube TV, YouTube Music. I used to use Spotify. Then I canceled that for Apple Music. Then I canceled that. And now I got YouTube Music because it comes with my YouTube Premium. It's great. It's actually better than Spotify, in my opinion. I love YouTube and YouTube TV. And but another streaming platform that I just bought. Hey, what's up, Ahmed? Yeah, we'll check out Astera Labs after this. That one's also at an all-time high. Yeah, these AI infrastructure stocks are all at all-time highs. It's so great. And then we'll look at I see Shell. Are you talking about the oil stock there, Eric? What's up, man? Do you know their ticker symbol? Because I think they're a Dutch company. I don't know if they're US listed, but I'll find it for you. I'll be really quick about Netflix. I did just buy this one at their current prices at 20 cents a share. It's $72.45 a share today. Funny news, some guy named Carl Eric, director of 47 Ronin, I've never heard of that, maybe someone else has, was just sentenced 30 months in prison for defrauding Netflix of $11 million that was intended for a TV show, which he gambled on cryptocurrencies and speculative trades. Sounds like the life. But anyway, Netflix right here. This one, I really like this, but one of the reasons why Netflix is struggling right now is because Netflix declines match bid for Warner Bros. Discovery. Yeah, I actually would think it's better if Netflix doesn't buy Warner Bros. Discovery. But yeah, their streaming market share fell because YouTube TV's taken over. YouTube TV took a 3% market share over the past couple years, but that's because YouTube's free. Whenever, it's not really, well, I guess, but yeah, Netflix, that is a problem. Declining market share is definitely a risk, but honestly, that risk can be I think it's close to fully priced in, especially with this huge sell-off. The forward PE is a 21. Like, how much cheaper can they go? I don't see them trading at an 18 or a 19 forward PE. And check out the revenue over time. Like, there's no, like, the fundamentals aren't deteriorating. The market share went down, but the fundamentals are at a record. Here's the revenue over time. Revenue hits a new record every quarter. It's a subscription model company. Analysts love it. It's all recurring, predictable. And I don't know about you guys, but Netflix just rose prices by like $2 a month. We're not canceling our Netflix subscription. They really do have pricing power. And if we zoom out on the profits over time, they just compound EPS at a good 20% CAGR. And so that's why I think the risk reward looks good to nibble today. Not go fully all in. Like, if you want Netflix is eventually 5% of your portfolio, don't make it 5% of your portfolio today. Only make it 1% or something and wait for it to fall 5 to 10% more to buy more. That's what I'm doing. I want Netflix as honestly, I want to double my Netflix position, but I'm not going to do it unless it falls 5 to 10% more. If it doesn't fall 5 to 10% more and this is the permanent bottom, then that's fine with me. I still got shares. So that's kind of how you want to approach stock buying in this, high volatility, high beta market. Started a position in Moog today. Didn't realize they could triple as a robotics player as well. Dude, they're in the humanoid robotics industry. They're in the data center industry. They're in the space and satellite industry. This is such a great aerospace and defense stock. Actually, I wonder if we can find that. Yeah, so Morgan Stanley has their Space 60 list right here, where Moog is one of the suppliers here. They own so many. Oh yeah, here, components and subsystems. There's Moog in the middle there. But not just for space, they're also in the humanoid robotics beneficiary list. Let me see if I can find that list right here. Oh yeah, right here. This is the post I made. So yeah, for the brain and the body parts, they do the complete actuators and stuff like that. Here's the robotics list if you want to screenshot this or something. A cool little list there. They're in the healthcare industries. I just love Moog. But that being said, it is a tough buy today. I would not buy this one at all-time highs. At a 39 forward PE, it is a tough risk to reward. So if you're going to buy, you do want to make it a super, super small position. But it's such a great company. They own like over 1,500 registered patents and trade secrets. The literal Voyager spacecraft that's still out there uses their patented valves. Every single satellite launch and mission launch for all of history have used their patents and stuff. So they're just really cool. There's their valves and subsystems. How much lower will CEG go, you think? Not much lower, honestly, because it's at a 21 forward PE. I don't see it going to like an 18 or a 19. I honestly think CEG, the bottom is close. So yeah, at a 20.8 forward PE, the risk reward is so fair. So let's do Astera Labs now. Yeah, what's up, Ahmed? Good to see you. Hey, if you're on TikTok and want to support me, please go to my YouTube stream. Just type into YouTube Nathan Robert. You'll find it. TikTok's been giving me so many issues, taking down my stream and the For You page eligibility. Hey, yeah, Jackson, if you have a stock, please give me the ticker symbol. What is Red Cat or, yeah, Jackson, give me the ticker symbol for that stock and we'll check it out. Yeah, if you have a stock, give me the ticker symbol, please. But yeah, let's do Astera Labs right here. ALAB, crazy all-time high, just like every AI. Okay, we'll find it for you, Jackson. I got you. So here's Astera Labs, crazy all-time high. AMD's at an all-time high. Amphenol's at an all-time high today. This is the company where if you have like a data center on AWS and you have another data center on Azure Cloud, they create these antenna communication devices for the data centers that allow them to communicate with each other. It's very fascinating, and this obviously is in such demand from data centers right now. Yeah, they have these like controllers, these modules, pretty cool company, and it's specifically for like data centers. So if we judge them off the fundamentals, they're not just at all-time highs for no reason. They're at an all-time high because the fundamentals have genuinely improved. Check out this growth of the revenue. You know, the lifeblood of the company, the revenue, it's up 93% year over year after, why is it like that? After it grew 150, after it grew 200%, like if we just zoom out, revenue is at a record, and not just the revenue, but the net income as well. Net income was up 152%, and then revenue only grew 93. So that means pricing power, net margin went from 19 to 26. Fortress balance sheet, man, this is a huge safety net. They have no debt, literally no debt, 1.18 billion of cash. Their cash just grows every quarter because whenever you make free cash flow and net income, they just retain it, goes straight to the balance sheet cash pile. So yeah, crazy good growth. Yeah, net income is supposed to hit 95 mil. Revenue is going to continue to grow. Revenue is going to hit 411 million in 2 quarters. Revenue's never been close to 400 mil before. This was already a record 300 mil. So that's why there's still a lot of future growth for this company, but it's a tough one because they traded 195 forward PE. That's a little too expensive for me. Oh, what app are you using? Hey, I'm actually on a brokerage. It's where you buy and sell stocks on. If you'd like to get it, I have it linked in bio there, linked in description. It's a brokerage called Moomoo. It's where you buy and sell stocks on. Multiple analysts raise Astera Labs price target on AI and CXL market growth. With the adoption of Microsoft Leo CXL extender. Cool. Anyway, AI infrastructure company there. Next up, I see, oh gosh, I am behind here. Sorry. Shell stock. Oh wait, I said Red Cat too. Let me find Red Cat. So, okay, RCAT. I think this is the Black Widow drone people. They have like one of the only NATO approved like drones that like Ukraine is buying a bunch of their drones and other NATO members. So the tough part is I still think they're struggling with net income positivity. Yeah, like they don't have a forward PE, so they're not supposed to make any net income anytime soon. Yeah, they're supposed to lose 27 mil next quarter, 22 mil the quarter after. So they're still net income negative, but that's okay because of the next 2 quarters of revenue growth. If we look at 2 quarter, the forecast, revenue is supposed to hit 52 million in 2 quarters. Revenue has never been close to 50 million before. You know, the highest quarter ever was 26 million. It's going to double from there. So there's still a lot of revenue growth to come. Unfortunately, they're still, you know, quite far away from net income positivity, but they have a fortress balance sheet, so they can afford to lose some money for some time because it looks like no debt, 130 mil of cash. So very interesting company here, but the forward PE and the negative, you know, net income, negative free cash flow every quarter, those aren't usually the kind of stocks I like to buy. I want companies that make net income, make free cash flow. That way they can return it to the shareholder via buybacks or dividends, and they don't have to dilute shareholders and issue shares, issue stock, or issue debt to fund an acquisition or pursue an opportunity. But pretty cool. Hey, try not to spam there. Yeah, we'll get to COHU. I'm a little behind here on the chat, so I want to get to some of these other ones. first that I saw out of respect. So Shell, real quick. Oh yeah, this is an oil and gas stock. So basically, it looks pretty similar to what Chevron and ExxonMobil are doing. So if oil prices start to escalate, like the Strait of Hormuz fears start to escalate, that would be to the pure benefit of this company. But historically, this is a commodity stock. And if we zoom out on Shell over time, technically Shell is the same stock price that it was in 2007. And I'm not just picking on Shell. You can look at any oil and gas stock. Historically, they just don't beat the S&P 500. You want to buy this as a trade, like a short-term trade around the oil fear crisis or whatever. This is not the kind of thing where you buy and never sell it. This isn't the S&P 500. But you do get a nice yield in the meantime. It's a diversification hedge. If war fears start to escalate, you buy this and this will go up and you get 4% of your money back in a dividend in the meantime. 8 forward PE. But yeah. So next up, I saw WYFI stock. What's up, Daniels? Are you winning? Hey, I don't know. What's your lifetime percent gain? Oh yeah, we'll check that out after this. Yeah. Can you look at Palantir? Oh, hey, we actually just deep dive into Palantir. So if you go on the YouTube, you can rewind it and check it out. Yo, Coach said ExxonMobil under investigation. Yo, did you see my TikTok post? That's my most recent TikTok. That is crazy, the ExxonMobil investigation. We'll check that out after this. Or actually, we'll check it out right now. It's super quick. So basically, here's what's happening. Administration ordering DOJ investigation into Exxon and Chevron over pricing practices. So he's accusing companies of price gouging customers. This is fascinating to me. So look, crude prices, so the commodity of crude fell 36%, but the average gasoline price only declined by 14%. This almost makes you want to buy ExxonMobil because, if oil prices fall, Exxon's earnings won't fall as much. But I think this is going to happen with the memory shortage. What we see right now is Apple, Microsoft raising prices because of the memory shortage. I believe when the memory shortage goes away, like if they have a huge cost reduction, they're not going to lower prices as fast. They're going to keep prices slightly elevated. Yeah, look, there's a bunch of, stuff like, what is this? Apple accuses India's antitrust regulator of copying rivals' claims in App Store probe. Anyway, U.S. court to hear Apple appeal an Epic Games Store fee dispute. Yeah, that's one thing I don't like about Apple. Apple is kind of forcing people to pay a 27% commission on every sale inside the App Store. And if you guide someone outside of the App Store to do a purchase, they take your app off the App Store. That's why Fortnite was no longer on the App Store for so long. And you know what? Apple's losing this. Actually, they almost put Tim Cook in handcuffs during the court case. I was like watching this because it interests me so much. Epic Games now has the Disney and the Tencent lawyers backing them against Apple. Okay. Next up we see what's up, Tours, and Malik said favorite industrial stock. Ooh, probably Powell Industries just because it's done so well for me. So yeah, next up we'll check out BOT. And what's up, SanDisk? Is it time to trim some of the position? I bought at 374. Oh, we'll check out SanDisk after this. That's the memory shortage stock. So here's White Fiber right here. Yeah, sorry, I got a big backload of stocks. I'm trying to get to all the new people stock first. So here's White Fiber. Or the stocks I see in the chat first. So here's White Fiber. I actually forget what this company does, but they're on my watch list. So they're a cloud service company. Okay. That must be growing very nicely because cloud's a big industry right now. Yeah. This quarter revenue grew 13, 48, 48, 32. It's a very fast cloud revenue growth. Looks like it's a pure international cloud play. I'm glad I checked this out. Looks like Iceland is 88% of all the revenue, and then Canada is the other 11%. So it's like a pure Iceland and Canada play of, what do they do? HPC and AI cloud data center solutions. So anyway, some sort of Iceland Canadian cloud play. Pretty cool. Let's see if they're net income positive yet, or what's that looking like? Okay, so revenue actually is growing pretty fast. Revenue's at a record this quarter. Revenue hit grew 30%. They are still losing net income, but revenue's going to pop up look at that. Revenue's going to hit 37 million in 2 quarters. The revenue's never been close to 37 million before. So there's still a lot of revenue growth for this company to come, but they're not going to make any net income still. So there's still good ways from net income positivity. Looks like Bit Digital. Isn't that like a Bitcoin mining company or something? Bit Digital owns 70% of the shares here. Interesting. I like the revenue growth. I do still need to do more research because it looks like they're not net income positive yet. But so someone said bot stock. I've never heard of this one. Robo Strategy. So not MicroStrategy, but we got Robo Strategy. What do they do? So it's a closed-end investment company. Just so operating in the fields of robotics and artificial intelligence. Can we click on their website? Okay. It's the first fund dedicated to investing in the leading private robotics companies through a publicly listed name. So, okay, so they own stakes in a bunch of, I guess, private robotics companies, and you can get ownership via this. I know Figure's already, but I actually really like Figure. Oh, look, they invested in them. FIGR stock. Anyway, some sort of company that owns a bunch of private robotics companies. So we're not going to get any like financial disclosures here. Anyway, we'd want to check like an NAV value, like the net asset value of their assets and stuff like that. There's a lot more research that needs to go into this. But anyway, $730 million company investing in like Figure and some of these other private companies. So let's do, all right, let me do SanDisk and then we'll get to COHU. I see people asking about that one. Oh, and GE Vernova, dude, GE Vernova is great. They're the one building the backup generators for data centers. So here's SanDisk. This is your memory shortage play. Looney, Yeah, Looney, the member, says he bought this one at $374 a share, which honestly wasn't even that long ago. It was $374 a share less than a year ago. Here's why it's also tough to be bearish. Honestly, it would make sense to trim a little bit, but here's why I definitely would not fully sell out. Don't fully sell out of SanDisk, in my opinion, because of this one metric that makes it hard to be bearish, and that is valuing them on a forward PE. SanDisk trades at only 12.8 times next year's net income. That is cheaper than the S&P 500. And here's the actual net income forecast. Like they're supposed to make $5.2 billion next quarter, $6.2 billion the quarter after. But here's what Morningstar's saying. It trades up the supply chain. While the immense AI-driven demand for tight supply, memory supply has fueled unprecedented pricing growth. Long-term market cyclicality and the eventual threat of oversupply pose significant downside risk that does require caution. So yeah, that's one thing to be worried about because there's just a huge temporary shortage of memory and SSD hard drives because of data centers. And these companies run at crazy. What's the margin this quarter? I want to find the net margin. They had 60% net margin this quarter. Micron also had like a 60% net margin. They shouldn't have 70% type margins. It's just a shortage. So the thesis is 2027, 2028 is most likely going to be peak ever EPS, and then EPS will never ever for the rest of time get there. But the thing is, we don't know how long the memory shortage is going to last. We just had the Micron CEO come out and say, hey, this memory shortage is going to last longer than expected. We see humanoid robotics being a huge tailwind for memory as well. That's going to lead to another supply chain. Any other news? Multiple analysts raised price targets. Okay. Okay, sorry. Drinking my water here. So COHU stock. So, wow. Congrats if you own this one. They're at, and we'll look at Cameco after this too. Cameco is my favorite uranium stock, Sean. That's a great one. So here's COHU right here. They're at an all-time high. So if you've ever bought this one, congrats. What do they do? So semiconductor test and inspection. Hey, that I can see why this stock's at an all-time high. I bet that stuff's in huge demand right now. Looks like the rest of the world, it's like an international play because check this out. Philippines 15%, Taiwan's 15%, China's 14%, Malaysia's 13%, and then the US, the United States, is only 10% of their total revenue. So this is like an international semiconductor play. And other countries are building out their AI investments as well. So anyway, there's probably just a huge tailwind for this company of just international build out of AI should help this one out. Looks like the growth is finally back. Revenue's up 29% year over year. Oh, what's this right here? Samsung and SK massive investments. Maybe they, wait, what ticker are we looking at? Let's see. We're at COHU. Where's COHU? I'm assuming they're on this list right here. Oh, there they are. So they're at the very bottom. They're the Probe Cards and Related. They got COHU in here. Anyway, maybe they help out or they're benefiting from the memory shortage, something like that. I don't know. Looks like SK, which is the main memory provider, is doing a huge investments, and that should maybe just go to the beneficiary of COHU. So maybe they participate in the memory shortage. So CCJ really quickly. This is my favorite uranium company, the best uranium company in terms of fundamentals, but they're also one of the most expensive because of its quality. Did we get any? So the uranium segment drove 711 million in revenue, driven by increased sales volume and improved average realized prices. So the U.S. and Canada is no longer sourcing our uranium from Russia and China. We're trying to be more rare earth mineral independent, so we're mining all of it now from Canada and the U.S. And Cameco is the purest and best play as the biggest one. With the best mines and stuff like that. And they make consistent net income right here. If we go to net income, they had a total one-time adjustment this quarter. They actually made like 60 mil that quarter. They are consistently net income positive every quarter. They're so net income positive that they even pay a dividend. The dividend payout ratio is actually lower than a 17%, but you do want to be careful at the 68 forward PE. They are expensive on a forward multiple, even, on the slight dip. So I would not buy crazy today. Yeah, it's definitely tough to buy anything meaningful today, but great net income forecast. Like they're supposed to make 190 mil, 62 mil the quarter after, and that's good margins. That's 190 mil of net income on 570 mil of revenue. That's really good margins. So Cameco is great. So I see Big Barney and Big Benny. What the heck? So I don't know which stock to analyze. What's up, y'all, too? So he said Grab stock. Let's do Grab right here. I know this company. And we can do UNH as well. This is international Uber. So they literally do exactly what Uber does, but internationally. So they do ride sharing and food delivery in these niche countries like Malaysia, Singapore, Indonesia, Philippines, Thailand, Vietnam. Notice there is no US, Canada, UK on here. So it's like a pure international play. And that's why it was genius for Uber to buy this stock. Uber's having a tough time getting into all those countries. So Uber's like, let's just buy the biggest guy. So Uber backs this company. Uber's the largest shareholder. Uber owns 13% of the entire company. And that was Uber's way of getting instant international diversification. So they're backed by Uber and Toyota Motor. They own 5.5% of the shares. And they're finally net income positive. Revenue's really growthy. Because 2 years ago, they weren't making any money, losing 40, 50 mil a quarter. Now they're making close to 100 mil a quarter, and the forecasts are great. So I actually like Grab. So, UNH right here, UNH. So this one is a lot in the government's hands. They fell back here because they were accused of, overbilling the federal government and prescribing people that back brace they didn't need for some extra profit. But the reason they gapped up right here is because the government finally allowed them to raise prices. They gapped up on a day that wasn't earnings because they were allowed to raise prices. When they frequently gap down, this happens all the time. They gap up or gap down on specific days only if the government allows or doesn't allow them to raise prices. So a lot of this stock total shareholder return are a lot in the government's hands, to be honest with you. But here's the thing. If we look at the forward PE, it's a 23. So they only trade at 23 times next year's net income. That's honestly pretty fair for a healthcare company. I definitely wouldn't be buying after this huge rally. But if they could just hit these numbers, that's just a fair S&P 500 multiple, a 23 forward PE. So they could honestly, that could even maybe go higher to a 25, 26, and there might even still be some more upside in this one. Morningstar says they're reasonably valued. The company benefits significant local scale advantages in improving medical cost ratio, ongoing regulatory scrutiny over Medicare Advantage risk assessments, and elevated medical utilization rates require caution. So yeah, they have there was also this metric, they had it pulled up last week over here, but they have one of the highest post-hospital denial rates and stuff like that, where they deny people. And anyway, if they can, I don't know much. I'm definitely not an expert on this, but 23 forward PE seems fair. 2.1% dividend yield. Interesting. We're a customer. We use OptumRx, and they own OptumRx. So, who? Oh yeah, GE Vernova. Let me do GE Vernova, and I see thoughts on Rocket Lab dip and surging today. Hey, what's up, Silent? Yeah, we'll look at Rocket Lab. That one is nice. When is Grab expected to go green? Net income positive, or I don't know when the stock's going to go green, but I wouldn't be worried about that one. I also wouldn't own too much of them because the forward PE is still a little high, but it's because they just got net income positive. I like Grab. So here's GE Vernova, huge, but basically AI beneficiary with you're not going to believe this, a $600 billion backlog. They really do have a $600 billion backlog. They also Microsoft and Chevron partner with a Texas power plant using GE Vernova turbines for data center. Basically, under every single data center that exists are two backup generators. and GE Vernova is the one that primarily makes those, and they make the best ones. So data centers, if the actual grid goes offline, the data centers, it costs millions of dollars a second if they're down. So they always have these backup generators, and it's the pure beneficiary of GE Vernova. Morningstar actually says even after this huge rally, they're reasonably valued. I think they're overvalued. So I definitely wouldn't buy today, but here's what they're saying. Its leading position in gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth. So the 61 forward PE is too high for me to pay, but I can totally understand why this one has done so good. Yeah, look at revenue forecast. It's up to the right. EBIT, net income, they're going to make 1.19 billion. So interesting company here. Looks like even Microsoft and Chevron are going to use these ones. So let's see. The combined cycle plan is or is there any other things? GE Vernova secures H-class equipment order for Vietnam's 1.6 gigawatt LNG power plant. Wow. Huh. Interesting there. The turbines are including, here, so look at this. The GE Vernova's $163 billion turbine backlog. It's projected to reach over $200 billion by the end of 2027. When you have a $200 billion backlog, that's just so invaluable. It's so great. It's a future insight. It's like future orders you already have. They're a $311 billion company. When you have a $200 billion backlog, that's a lot of long-term stability. So Rocket Lab real quick. Yeah, let's check out this one. I see Oracle too. Yeah, let's do Oracle after this. I see a bunch of people asking about that one. That's like the fourth or fifth best cloud play. I think they're like the fifth biggest market share. I personally like Microsoft Azure Cloud is the best cloud stock to buy right now. I think it's a way better deal, and Oracle has way too much debt and too high of a dividend payout ratio. But Microsoft's at like a 19 forward PE, best cloud play for the valuation right now. So here's Rocket Lab. This is a space company. What is this? Rocket Lab to acquire Iridium Communications for $8 billion. Dude, that's like a huge chunk of their market cap. Yeah, that's like 20% of the whole company. So I'm assuming they're having to use, they're issuing shares to do this. So NASA awards Rocket Lab 3 Electron launches, Rocket Lab to join the NASDAQ 100. So yeah, major passive funds will head into this stock right here. Rocket Lab completes 10th consecutive satellite launch for Synspective's Earth observation mission. Rocket Lab launches Victus Haze mission, sets new crew. Anyway, out of all the space stocks, this is the one that has the best deals with NASA, JAXA. The one bad news is they're still very far away from making any sort of profit. Revenue's great. This is why it also kind of doesn't matter because they're backlogged too. This is so impressive. The revenue just hits a new record every quarter. Crazy record, up 63% year over year. Some of that is funded by acquisitions like the Geost acquisition and some other ones as well. Actually, that's historically fueled a lot of the growth of the revenue has been acquisitions. But the bad news is they still lose a lot of money. They're losing 50, 60 mil a quarter, and they're projected to lose 43 mil, 34 mil next quarter. So they're still far from net income positivity, but it's okay if they keep up this crazy fast revenue growth. And I think you have like a $2 billion backlog. Their space systems business is up 57%. Launch services is up 78%. Both are very fast growing. So yeah, I love the growth, and I wonder what they're going to do with this acquisition. So Iridium's another stock, it looks like. It's publicly traded. IRID, Iridium Communications. So this is who Rocket Lab is buying. Is it it must be some other satellite company. I don't know. Do they make money? Oh, you know what? That's actually genius for Rocket Lab to do. Thank you. They bought a company that makes net income. Let's go. Maybe it'll be accretive to EPS because they're issuing shares at this extremely overvalued price. It's honestly smart to buy a company that makes net income. What's net? But yeah, there is no forward PE or E, and the free cash flow is so negative as well. It's tough to value. Someone said, "Isn't SpaceX just a scam?" It's not a scam, but it's one you don't want to buy, in my opinion. Oh wait, I want to do the Oracle, and then we'll do AMAT after this. So honestly, my thoughts on Oracle is I'd rather own Microsoft. They're way too much indebted. They pay crazy interest on their debt. They pay out too much of their earnings in a dividend when they need to focus on paying off the debt. Oh, look at that. OpenAI may delay IPO, raising uncertainty over Oracle's $300 billion data center deal. So yeah, that's another thing. A lot of this company's backlog, and basically there's a huge customer concentration here. OpenAI is spending like $200-300 billion on Oracle. And if they're having, money issues, that's not great. Let's see. What's this? Oracle has a $300 billion deal with OpenAI to build data centers through 2030. So the IPO delays bring sustainability on it if OpenAI can even fulfill the backlog at this point or continue to pay it. And look, they're doing more bond issuance, dude. If you don't know, Oracle bonds trade at junk bonds. You can buy Oracle debt and get like 5 to 6% of your money back. They trade at legit junk bond levels because the market is not trusting how fast they're so far away from being able to like sustainably pay off the debt. It's unfortunate. Yeah, here's the free cash flow, negative free cash flow every quarter. They're spending more than they're making. So they're spending 15, 19 bill a quarter. They just projected like 20 bill a quarter for the next couple quarters. They only make, after tax, 4 to 3 bill a quarter. So they made 4.3 bill this quarter. They didn't retain all that. Part of that goes to a dividend. The dividend cost 1.5 billion. And also they pay a bunch of interest. That's in the income statement. They paid 1.15 billion in interest expenses. Look at the interest expense, the highest it's ever been. So they pay a billion, just 1.1 billion a quarter just in interest. And they pay out another 1.5 billion in dividends. Like, they don't retain any money. So I really am kind of worried about Oracle, despite the low forward PE. Yeah, Oracle faces concerns over $130 billion debt burden and massive AI infrastructure spending. Yeah. Anyway, honestly, Microsoft is the answer. Microsoft is the best, it's the second best cloud play. They have the second largest market share. Number one is AWS, then it's Microsoft Azure Cloud, then it's Google Cloud, then it's Oracle Cloud. So you get a bigger cloud market share, but you also get some other great businesses, and that's what I like. It's not like a pure cloud play. Anthropic's Claude AI models launch on Microsoft, powered by NVIDIA. Cool. Anyway, I love Microsoft Cloud, and Microsoft trades even cheaper. Like, it's also on a downtrend. It's not just Oracle on a downtrend. Microsoft's on a massive downtrend too. And this one's even cheaper at a 19 forward PE. And you get the great software exposure, the cloud exposure, and the AI exposure because they own 28% of OpenAI. Actually, that's another way. Hey, OpenAI is the one spending money on Oracle, and Microsoft owns OpenAI. 28% of them, and they're up crazy on their investment. What is this? Oh yeah, AMAT right here. AMAT. I think that's like that's the international like semiconductor supplier right here. Another basically AI picks and shovels play. Applied sets best monthly rally since, I'm not gonna click on the article, but let's see if there's any news here. So they're in the RAM shortage. Okay, I think I just disconnected my phone, but I'll read this. Oh, here it is. Applied Materials announces global lead in RAM equipment market share, unveils AI memory and advanced packaging roadmap. I wonder what their actual, so DRAM equipment market share. I wonder what their actual market share is. It covers 15 out of the 19 steps. So Applied announced its equipment market share has risen to the global top position from below 15% in 2013. So they have well over a 15% DRAM global equipment market share. And this really is like an international play. If we go to where the revenue comes from, China's 30%, Taiwan's 25%, Korea's 20%, US is 10%, Japan 8%. So it's a nice international play, and they crush expectations every quarter. This is why the stock is at a crazy all-time high right now, never goes down. It's because they crush expectations every quarter. Easy. Like, the orange line is what analysts project, the blue line is what they actually report, and for the past 3 quarters in a row, they beat by a huge chunk. So I'm very impressed with them. Yeah, 30% net income growth. But would I buy today? No, probably not at this all-time high level at the high forward PE, but apparently they're a part of this, the RAM, the memory shortage equipment plays. Yeah, 50 forward PE might be a little tough to buy today. So is that a buy now or hold off? Ooh, I forgot what stock we were talking about there, Aussie. For Oracle? Yeah, honestly, I just wouldn't allocate any new money to Oracle. I don't know if I'd sell out in them, but I definitely would be cautious with Oracle. So what about Micron? Yeah, or speaking of the memory shortage, here's Micron right here, the largest, purest play. And here's why it's tough to be bearish. Here's why, honestly, I could see Micron going up another 30%, which to most people sounds crazy. Like, they look at this chart, they're like, okay, there's no upside left. Like, we're doomed. But the thing is, when you do a fundamental analysis, like you look at a forward basis, they only trade at 7.9 times next year's net income. That is honestly cheap. And here's the actual forecast. You know, they're going to make 35 bill in net income next quarter, 39 bill the quarter after. So they're only trading at 7.9 times next year's net income. That's not peak bubble. You know, that's not peak bubble valuations. Maybe that can stretch up to like a 10, 12, something like that. Micron SK face antitrust lawsuit over alleged price manipulation. Causing DRAM prices to surge 700% over 4 years. The lawsuit seeks triple damage and injunctive relief to stop alleged supply restrictions. So maybe they're to blame for part of the memory shortage or something. But anyway, these stocks, Micron CEO warns memory supply constraints beyond 2027. So a lot of the fear is like this trades off the sentiment around the memory shortage because we know they're not going to keep up 70% net margins forever. 2027, 2028 is most likely the peak ever EPS, but the CEO's coming out and saying, look at this. It's going to persist beyond 2027 due to AI-driven demand. He forecast a multi-decade demand cycle from humanoid robotics. So humanoid robotics use a lot of RAM and stuff. So anyway, I don't know. Apple seeks U.S. approval to use Chinese memory chips amid rising memory costs. That's actually funny. Apple's asking the U.S. regulators, yo, can we just like buy some Chinese chips? What is this right here? The company raised prices on iPads and MacBooks. It's on the Pentagon. So CXMT is on the Pentagon's list of Chinese companies alleged to be aiding its military. And I guess that's the company Apple wants to use. Funny news there. I just like looking at the news. Okay, we'll look at a few more here. Dang, I've been live for a while. Thanks to everyone that showed up. If you want to hit the like button, I greatly appreciate that. Hit the subscribe button if you'd like. We try to every day. I sell literally nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. I don't coach. I literally sell nothing. Only thing I have is a YouTube channel. If you really want to help a brother out, please go follow and subscribe to my YouTube channel. Just type into YouTube Nathan Robert. So anyway, here's ADMA Biologics. Oh, I remember this one. This one is honestly looking cheap. They're a manufacturer of prescriptions and stuff. So I'll go to their website right here. They actually like discover a patented immunology technology. Anyway, if analysts are correct, this one honestly looks very undervalued. They're supposed to make 43 million net income next quarter and 50 million the quarter after. If we look at a forward PE, the forward PE is a 9.5. They only trade at 9.5 times next year's net income if they're right about this. And that's why it's tough to be bearish. And look at these margins. The growth did slow down. So that's one of the reasons why they're on a downtrend right now. So the lifeblood of the company, the revenue actually declined 0.27%. So, that doesn't beat inflation. That's negative. But the net income actually rose 44%. So that's huge pricing power. Look at that gross margin expansion. This is real. Gross margins went from 53 to 70. Net margins went from a 23 to a 39. And that's real. That's not some accounting fluke. They genuinely have these really good margins. So, anyway, let me get this person out in chat. Actually, this person in chat, I can copy their username. I know if someone on TikTok, I can fully get this guy banned off TikTok, his whole account. So whenever you see someone in chat like Golden Cell, but go to bio, or those are always scams. Never click on those. But I assume everyone already knows that. Anyway, next up, we'll look at a few more here. Oh, what's up, Fishy? Good to see you. Yeah, I have not been looking at the TikTok chat. I apologize. Here's Qualcomm right here. This is a chip company. This is almost like a royalty company as well. Is there any news? Qualcomm to acquire AI software startup for $4 billion. Cool. Qualcomm unveils AI data center strategy. Targets $15 billion in fiscal 2029 with Microsoft and Meta as customers. So they got Meta and Microsoft as customers. Quantum plans to bring data center technology to smartphones to enhance on-device AI capabilities. So if you didn't know, they own like Snapdragon, a bunch of these like phone chips. They own all the patents. Check out the very first line at the very top of my screen. Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds many essential patents used in these networks. So they're collecting royalties. And they got Qualcomm in talks with TikTok to provide custom chip design services for video processing units. Hey, that's interesting. And it's tough to be bearish. I mean, a 27 forward PE, that's like a reasonable valuation, 27 times net income. Here's their smartphone chip market share. I guess it declined a little bit as Apple is making their own chips now, but still a 22% smartphone chip market share and great net income forecast, like 1.49 next quarter, 1.68 the quarter after. And hey, maybe there's some new growth, but it looks like that's kind of getting sold off. That huge rally that they had is kind of getting sold off, but interesting there. like a phone chip play that's maybe getting into data centers and interesting. I already sold, but Caterpillar has been fantastic, made 40K off of it. Yeah, Caterpillar benefits from the onshoring and re-onshoring of US manufacturing, like and data center construction, rare earth mineral mining, and just manufacturing back to America. Caterpillar has been a pure beneficiary, and they've crushed expectations. The orange line is what the analysts projected every quarter. Notice they beat by a big chunk every quarter. And notice the future forecasts are great. It's supposed to hit 3 billion of net income in 2 quarters. I don't think the net income, yeah, it's never been 3 billion before. So they're about to hit a record net income. There's just great tailwinds for this business, but maybe it's, I think you were right to trim and sell a little bit. Because definitely it's not a good time to buy today at a 42 forward PE. But yeah, the construction industry is 40% of the revenue. Then the power and energy resource industry. So pretty cool. Another huge beneficiary who basically owns a bunch of Caterpillar equipment and rents them out is United Rentals. They're also at an all-time high right now. And then there's actually a case where actually like renting the equipment is better than just buying it outright. So United Rentals is at a crazy all-time high right now too. So yeah, the construction, data center construction boom has been great. Rocket Lab, why it go up? It did an acquisition. So here's why I suspect Rocket Lab went up so much. I'll be quick about this because we did just analyze them like legit 5 minutes ago. But they're acquiring a company called Iridium. And if we look at Rocket Lab right now, they are very far away from making any sort of net income. And the net income forecasts are bad too. They're very net income negative. But this Iridium company that they just acquired, it's IRDM, is actually very net income positive. So I think it's a nice thing. Like they're diluting shareholders. They're paying all stock. They're diluting shareholders at a super overvalued price to buy a company that makes net income. I think it's really smart. So it should be accretive to the EPS. Basically, there's more hopes they're going to get net income positive, but I don't know. I'm certainly not buying them. They're still extremely overvalued. Started taking different approach to trading with preferred shares. How do you feel about them? I've never found the need to buy preferred shares. Like I don't even know any like preferred share ticker symbols. Is it preferred share? Sometimes it's like debt you're buying. But yeah, I think those have like the first right. Like if the company goes bankrupt, like you're the first person to get paid or the first right to the assets, or it's maybe a safer buy. Like Warren Buffett, he doesn't own like Bank of America. He owns like the Bank of America preferred stock where he gets the first right if the company goes underwater or something to get paid back first. I don't know. Hey, what's up, Dr. Dummy? He says, do you find car companies interesting? For example, Toyota's fallen recently. One cool part is the that I'm actually looking at is buying LAD Lithium Motors. This is actually a company that owns, I know someone that works there. They acquire like 5 new car dealerships. They own a bunch of car dealerships and they acquire like 5 new dealerships like a week or something. They have like a board where they show it, and they're specifically acquiring these like high quality, like high end, what am I trying to say here? Like the Ferrari, the Teslas, not just some. Anyway, I don't know what I'm trying to say here. They trade cheap. They're at like a legit 8 times forward PE, 8 times net income. They do massive share buybacks. They pay out a really good dividend too. Yeah, look at this. You get a 0.76% dividend yield for only a 6% payout ratio. That's a higher yield than Apple and half of the payout ratio. So that's because they're at an 8 times forward PE. Anyway, I know that's one you could put on your watch list, but buying Toyota Motor, I don't know. This is the pure commodity. Cars, like I would never own Ford. Ford is lower than they were 2 decades ago or even longer, but it's just a low margin commodity. Let's see what their net margin is. Net margin, they have a really good margin. Actually, out of all the car companies, Toyota Motor is by far the best, I will say. Ferrari actually runs at like a 20% net margin. That's like the highest one. We'll convert the currency from Japanese yen to USD. Yeah, around a 6-7% net margin. Pretty cool. 3.5% dividend yield. What's the valuation? Yeah, trading at 8 times forward PE or 8 times net income. Yeah, Japan allocates $660 million in subsidies for solid state battery development. So that's, SSDs. That's part of the memory shortage right now. What is that? Japan holds 37% of global solid state battery patents. Separately, 9 Japanese battery equipment manufacturers, including Toyota, formed. Anyway, Maybe there's an AI tailwind, but that's the best car company. Like I wouldn't own Ford. Like look at Ford right here. They're lower than they were in the year 2000, and they have really choppy margins. Like sometimes even like negative margins too. Isn't STRC a preferred share? Oh, actually, that might be. I don't actually, yeah, preferred. And just because it's preferred doesn't mean it's safe. This one's supposed to always stay at $100. It's like supposed to peg at $100, but there's been so much lost trust and like Peter Schiff calling this a Ponzi scheme that it's decoupled from its $100 level because they're having to sell Bitcoin for an unrealized loss just to sustain the dividend on that. So that's not a dividend company I prefer. Google. I just own Google because I don't care about the voting rights. Yeah, it's basically for if you're a retail investor, just like you and me, like just GOOG, but both of them move identical. Like you're not missing out on extra gains by buying one versus the other. They both move identical. But yeah, Google is one of my favorite stocks ever in history. Talk about the best like advertising play. I love their AI play. Honestly, I love Gemini over ChatGPT by far. I love Gemini. Great AI play, great cloud play. Actually, look at just the Google Cloud. Just the Google Cloud business did 20 billion of revenue this quarter, up 63% year over year, the fastest growth rate on the entire screen. They also own a huge stake in Anthropic. They own like 15-20% of Anthropic. They also own 7.5% of SpaceX. And at current valuations, they're actually up over 50x. They're up over 50 times on their SpaceX investment. Google reduces UK Play Store fees. Cool. MediaTek reportedly wins larger role in Google TPUs, potentially reducing Broadcom's market share. Anyway, Alphabet to replace Verizon in the Dow Jones Industrial Average. That's good. Anyway, yeah, they own YouTube. They're in space, then Google Cloud. I have nothing bad to say about this one. And they have a $300 billion backlog on their cloud business. They're trading at a 27 forward PE. This is why it's tough to be bearish. You know, Google, this isn't peak valuation. 27 times next year's net income. They pay a dividend. They have the second largest share buyback program on earth behind Apple, though they have slowed it. Wow. Google Cloud revenue at 308 billion by 2028. Remember, it was 20 billion just this quarter. So what's cool about the Google Cloud is the part of that it includes the Google is so great with their cloud because they have their own TPUs. Google has such good TPUs, more cost efficient than NVIDIA's, that they're literally selling a bunch of Google TPUs. The cloud, Google Cloud's EBIT, earnings before interest taxes, is going to reach 132 billion by 2028, representing 46% of the company's total EBITDA. Whoa. So anyway, that's one. If you're a fan of the cloud business, like I know people talk about Oracle, I love Google, I love Microsoft, and you get they also own Android. They literally own Android in the Google Play Store. They own Waymo. They're in quantum chips, TPUs, autonomous driving vehicles. Anyway. And then, by the way, full disclosure, I own a ton of Google because I love them so much. So if we head over here, you know, I own 18 shares of Google for a reason because they're so great. And really, they've had great performance this past year. They're still up 95% the past year. That's where all my gains came from. I'm up 117%. So, bruh, no, I'm not trying to watch your live stream, Robinhood. Thank you. We'll look at a couple more here. Then I sadly got to go. But I appreciate everyone that's here. If you wanted to follow button, I try and stream every day. So you tend not to speculate at all. I understand MicroStrategy is inherently risky, but it's in the market. Yeah, I would not buy MicroStrategy personally. Maybe as a short-term swing trade, day trade, but you know, if you're buying MicroStrategy to play Bitcoin, I would much rather buy actual Bitcoin than MicroStrategy, in my opinion. You know, I'll buy Bitcoin when MicroStrategy goes bankrupt, and prediction markets just had MicroStrategy can go bankrupt. Bitcoin can't. So they have a huge unrealized loss on their Bitcoin. You know, economist Peter Schiff accuses MicroStrategy and Michael Saylor of misleading investors, calling it a Ponzi scheme. Basically, what MicroStrategy does is they issue a ton of shares and buy Bitcoin with that money. And that's worked, but their average cost is over 75,000 per Bitcoin, and Bitcoin's at like 59,000. Yeah, at the very top here, they own 850K Bitcoin at an average cost of 75,000, facing unrealized losses of 14 billion. And how are they going to sustain the dividend of STRC? They're having to sell Bitcoin at it for an unrealized loss. Someone said, someone said GENB. I would not buy GENB. The only reason you've probably heard about that one is because NVIDIA just took a stake into them. If we go to the NVIDIA portfolio, you know, NVIDIA owns Intel, CoreWeave, Nokia. They also just bought GENB. I have no clue why, because this is complete junk. You can kind of just trust me on this one. But yeah, $2.24 billion company, and they lost 61 mil in net income, 45 mil the quarter before, and the revenue declined 18%. The revenue's only $7 million, down 18%, lost 61 mil in net income on that. And look at the net income forecast. They're supposed to lose 67 mil next quarter, 72 mil the quarter after, and the revenue is supposed to be 6 million. So this is like some startup biotech company. I would not buy them. It's a clinical stage generative bio company pioneering the AI revolution in biotech and drug design and development. So anyway, not one I trust. They're probably just... Also, doesn't YouTube make more than Netflix? I bet. I don't know, actually. Oh, part of the strategy. Hey, what's up, Noah? So, oh, what's up, Zero? Anyone know what app this is? Oh, I'm on a brokerage. It's called Moomoo. You can just type in Google Moomoo. But if you want to use my affiliate link, I actually have it linked in bio. So if you just click on my bio there and click that link, if you end up depositing $100, we'll both get like a free fractional share of a stock. Yeah, a brokerage called Moomoo, though. It's where you buy and sell stocks on. They ask for a bunch of information because it's a brokerage. But here's Parker Hannifin. I actually forget what this company does, but congrats if you own this one there. Parker Hannifin's at a crazy all-time high. Would you buy Micron? I'm being cautious with Micron. I wouldn't buy Micron meaningfully. But yeah, it is tough to be bearish at that low forward PE. You're right. Sorry, back to Parker Hannifin there. That comment kind of caught me. So they do diversified industrial and aerospace systems. That sounds like a niche industry. You know, the aerospace business is growing very nice, 15%. That's the highest growth rate it's been in a long time. And their other business, oh, it's finally green. So they used to kind of have negative growth, but the growth is finally back. It's up 8% year over year. They have a 0.75% dividend yield. So specialty industrial machinery and aerospace is their industry. So let's go to net income. So yeah, they're a money printer. They're easily making close to like $1 billion of after-tax net income every quarter. Yeah, on $5 billion of revenue. So nice. Net margin did decline slightly this quarter, but the stock isn't worried. The stock is just at an all-time high nonetheless. Nice. And I mean, 32 forward PE might be a little expensive, so I definitely wouldn't really be buying today. But oh wow, they've been beating on expectations. So analysts forecasted a decline in net income, but they beat on those expectations. Check that out. The orange line's what analysts project. They beat the past 3 quarters in a row by a pretty good chunk and on revenue. So that must be why the stock is doing so well. They're crushing what the analysts are thinking. Good job to them. Why buy companies like Google, which leverage AI why buy companies like Google then, which leverage AI far more than MicroStrategy does Bitcoin? No, dude, MicroStrategy, those are 2 different realms there. Yeah, Google's great. And strategy is just Bitcoin. Search it up. It says YouTube generated $60 billion in total revenue, while Netflix brought in $45 billion. Oh, I wonder what the net income on that was, though. Maybe Netflix has a higher margin. I don't know, though. It's a good question. Oh, yeah, Ulta Beauty, ULTA. Ulta Beauty right here. This right here. Hey, what's up? Well, then we'll try and find VFS after this too. I'm trying to get to all the new people's stocks I see in here. Thanks for all the new people that shows up. If you're enjoying, please hit the like and subscribe if you're enjoying. So here's Ulta Beauty. I think they're a better buy than Elf. I have seen Elf Beauty, and this one, Morningstar says they're reasonably valued. Unmatched product depth and industry-leading loyalty program with over 46 million members. Strategic store upgrades are expected to sustain long-term value growth. So what I love about this one is just the consistent net income. I know it's kind of flat. It hasn't grown too much from a couple years ago, but still it's consistent and way more consistent than Elf. They're easily making like 200 to 300 million of net income a quarter. And what are they doing with all this net income? Well, look at the net income growth rate. Net income grew by 11%, but the net income per share grew by 15%. How did the net income per share grow faster than the net income? Well, it's because of the share part of the ratio. They've bought back 4% of the whole company, so the EPS grows 4% faster, giving you legit 4% more ownership in the company. Whatever you owed 1 year ago, you now own legit 4% more of the company. So I love companies that do share buybacks. So I like this one. It's at a 15 forward PE. The risk reward starting to look very fair. I think Ulta Beauty is just on this massive downtrend because kind of the whole industry is. Like if you look at Elf as well, they're also down bad from their peak. But yeah, that one I love. They have a good dividend too. So what is VFS? FinFast? We'll check this one out. Although I don't believe in Chinese cars because cars are supposed to be reliable and long lasting, but Chinese products are anything but that. Yeah. Honestly, well, I have seen some Chinese cars. If we allowed Chinese cars in the US, honestly, they'd probably be everywhere because they are cheap and they are decent. Actually, they're the BYD ones. They're good, actually. But we tariff the crap out of Chinese cars and Chinese phones. So anyway, here's VinFast Auto. They're a $7 billion company, even at this like down all-time low level. I thought they'd be smaller. Okay, so they're actually okay. So we can't even convert the currency. What the heck? So they report in VND currency. Where are they? Is that Russia? Where are they headquartered? Vietnam. Okay, they're headquartered in Vietnam. Okay. Manufacturing of electrical vehicles. It offers electric scooters, electric buses, provides e-mobility ecosystem. So anyway, so some sort of electric bus, electric scooter company. Car and e-scooter. Huh. Well, there you go. Looks like all their sales are in Vietnam, though. So a pure Vietnam scooter play, yikes. Again, I would convert this to USD since they lost 28 trillion. That's not in US dollars. I do wonder what it is in US dollars because I bet it's a big loss. But anyway, it looks like they're losing 20 to 30 trillion a quarter. Definitely something to be cautious of. And they look like they're leveraged. They are leveraged. They have more liabilities than assets. So I can kind of see why this one's struggling because they're still so far away from net income positivity. And it's kind of a total commodity, a scooter, a bus, electric ones are probably more expensive. I bet the net margins are very low on that. Sorry, my point was to rebuttal your point on MicroStrategy's debt. One is simply just to bear in a market. I'm not sure I still don't even know what you're talking about. MicroStrategy, all they do, basically they issue shares and they buy Bitcoin with it. Here's what you do. You go to the cash from investing activities. If this is positive, this either means they issued debt or issued shares. Every quarter, this is positive 7 billion. It's always shares. So they issue 7 billion of shares a quarter, and they go and buy Bitcoin with that. And right now, they have a huge unrealized loss. They own 850K Bitcoin at an average cost of 75K a coin, and it's like 59K a now for a $14 billion unrealized loss. And they have this dividend thing. They have to pay out 1.4 billion in dividends a year, and they're having to sell their Bitcoin for an unrealized loss just to sustain it. So, and the whole MicroStrategy thing basically is a Ponzi scheme where they issue shares and buy Bitcoin with it, and that kind of props up the price of Bitcoin. But yeah. And at the end of the day, like, what is Bitcoin? Like, let's say you own every single share of Apple in the world that exists. We're left with a company that makes net income and free cash flow and has a brand and has sales. But if you own every single Bitcoin in the world, what are you left with? It's not some income producing asset. If you own every Bitcoin, you're not getting net income or like I don't know. So that's why I actually don't own any Bitcoin. I own 0 Bitcoin. Oh, look at that. Bitcoin option market shows persistent downside protection demand. Huh. Bitcoin ETF record 8th consecutive day of outflows. 4.3 billion in net withdrawals. Yikes. Anyway, Galaxy CEO and Ripple CEO criticize Strategy's leverage Bitcoin model as a market risk indicator. So anyway, yeah, they have dividend obligations of 1.7 bill with cash reserves declining. So I don't know, but I'll buy Bitcoin whenever they go bankrupt. But yeah, show all your stocks before you leave. Oh, hey, and you said AMD stock. Yeah, here are all the stocks that I own in here. I own companies that print net income, print free cash flow, do share buybacks. They don't issue shares. They buy back their own shares and pay dividends. Actually, I got way too many stocks. I have a lot of portfolios here. But what you'll see is just quality, like S&P 500 type stocks. Most of all my stocks are in the S&P. Here's my lifetime percent change on every stock in here. Oh, yeah, we have a Roth IRA as well. I just keep it simple. 4 stocks in there, 6 stocks in here. And then here's kind of like my risk on portfolio. And I actually just sold a share of AMD today. Yeah, what's up, Debab? Congrats if you own AMD. Do not buy it today. Actually, I just sold a share today on this rally. Will it show me my sell order? Hey, there's my sell order right there. So I sold a share at 577. I didn't fully sell out, but I still got 6 shares left. But it's almost $1 trillion company at 109 forward PE. Honestly, it's smarter to sell than buy at current prices. But I've been buying some stuff with that. I have been hold Intel since they were still giving out a dividend. I want to buy a mini Chinese camper if they let Chinese vehicles. Yeah, that's Tesla would get crushed if that ever happened. That's the reason Tesla sales are so good in the US, because we tariff everyone else's. But the thing is, like China, this is the funny thing. We don't allow Chinese phones and Chinese cars. It's all spyware and stuff. But in China, they allow Apple iPhones because there is no backdoor. Not even Apple can open the backdoor. Like the data is so safe with Apple, and they allow Tesla vehicles as well in China too. All right, we'll look at a few more here. Huffs. Oh yeah, Microsoft. Okay, let me do Microsoft really quickly. I see Pinduoduo. That's Temu stock, Chinese Temu. Temu's publicly traded under PDD. I'm only up 70%. Should I sell? I would trim the slight bit. I would definitely trim. I would not fully sell out, but I honestly would trim a slight bit. And honestly, what are you going to do with that cash? I would consider buying Microsoft because that's what I'm doing right now. The risk reward looks so good on Microsoft. This is the world's best software company, the world's second best cloud company, and one of the best AI plays because they own 29% of OpenAI. So the main reason, if we look at Microsoft, they're on such a massive downtrend from their peak. They're on such a massive downtrend because they're the world's number one software company. They're saying that AI is going to hurt Excel, spreadsheet, Word, PowerPoint, all that. Just that software business does 120 billion of annual revenue. But out of every software company, Microsoft is the best hedged because if OpenAI and like AI really takes over their software, their cloud business will continue to boom. Their Azure cloud is the second largest market share, also does over 100 billion of annual revenue, and they already own 28% of OpenAI. So they're already hedged way better than a lot of other software companies. And I'm actually a believer that AI isn't going to make their software go away. It's actually going to get enhanced, like AI features on Word, AI features on Excel. So I'm not worried about that. And the net income forecasts are phenomenal. They're supposed to make 31 billion next quarter, 34 billion the quarter after. They only trade at 19.8 times forward PE, only 19 times net income. That is ridiculously cheap for the quality Microsoft is. Morningstar kind of agrees. Morningstar says they're undervalued. Robust demand for Azure, driven by cloud expansions and AI workload surges, alongside its highly entrenched Office ecosystem, will drive long-term value growth. I have no complaints about Microsoft. Valuation's good, and that's why I just initiated a position in them. I'm only up 2.93%, but the risk reward just looks so fair. Yeah, that blue line's my little cost basis there. Yeah, at this 19 forward PE and a 1% dividend, you get over 1% of your money back into dividend, 21 forward PE, get exposure to software, cloud, AI. It's such a great quality company. And here's some news, I guess, as well. Microsoft criticizes AI power concentration, pushes for democratization and cheaper models. Any other news? Microsoft shares record worst first half performance since the year 2000. Oh yeah, there's also the memory shortage. So Microsoft is actually raising Xbox console prices by $150 due to memory cost surge. Apple is raising costs on their phones as well. I'm a believer that whenever the memory shortage goes away, they're going to keep prices slightly elevated. Like costs are going to go down by 50%, but they're not going to lower prices by 50%. That could be good. My sister works at Marriott, and they're only allowed to use Copilot. Interesting. What's up, Luffy? Yeah, Microsoft owns Copilot. I know they own OpenAI, but Copilot's just as good. Honestly, like I've used every model. They all work like I'm really honestly satisfied with any model, but I just prefer to go to Google Gemini. Yeah, BYD is the biggest car producer now. Have you seen their factories? I think I'm going to make a TikTok on it. The size of their factory is ridiculous. It's like bigger than certain states. What about J&J, Johnson & Johnson? Oh, hey, what's up, Unsocial? But I think people would choose reliability over cheap, yeah. So J&J, Johnson & Johnson, this is like one of the best like blue chip stock that exists. It's a great dividend growth company. You buy a share right now, even at this all-time high level, if you bought a share of Johnson & Johnson, you're still getting 2% plus of your money back just in a qualified dividend every year. But Johnson & Johnson was really grown this past year because of their oncology business. It is extremely growthy, and because of their Shockwave acquisition that can literally like shockwave diseases out of you. It's crazy. But honestly, Morningstar isn't, I'm actually surprised. Why is Morningstar so bearish? So Morningstar says they're overvalued, looming patent cliffs for key biologics, persistent product litigation risk, and potential U.S. drug pricing reform requires caution. Anyway, at a 25 forward PE, that's still, even at this all-time high level, Johnson & Johnson's like reasonably valued. I think they could pay off all their debt in less than 2 years of free cash flow, 25 forward PE. So yeah, they have missed on earnings. They still have that one lawsuit pay. Forget what that lawsuit was. I think it was maybe like some baby formula something, or I don't know. Let's see. Anyway, here's what the bulls and bears are saying if you want to read this. Like, yeah, J&J strong position in oncology. That's their main growth driver recently. Anyway, I kind of wish I owned them. I own AbbVie. A lot of these healthcare stocks are at all-time highs. First off, congrats if you ever bought Johnson & Johnson. You're definitely up on your money. I've been talking about AbbVie too. ABBV just hit a crazy all-time high as well. These are stocks I've been saying where if you like good dividend yields and you want still some stock price appreciation, AbbVie and Johnson & Johnson are like pretty good. But buying today is not the move. All right, we'll look at a few more here. Oh yeah, PDD. Yeah, this is Pinduoduo right here. So this is Temu, basically Chinese Amazon. What's the valuation on this company? A 7.1. So they trade at 7 times net income, partially because they're a Chinese ADR, they're a Chinese listed stock, and they used to go through this loophole where they wouldn't pay taxes on they were called gifts, where if the value of the package is under like $200, it's like completely tax free. But they were purposely shipping stuff, like they would have shipped more in bigger packages, but they're shipping stuff in smaller batches to get it to not pay the taxes. But anyway, Morningstar says they're undervalued despite near-term margin pressures from heavy first-party investments, the robust network effect of its domestic platform, and the rapid adoption of global expansion of Temu will drive long-term value growth. Oh, cool. We get some metrics like they have 750 million monthly active users. Jeez. Here's their net income. Yeah, this is in US dollars. We've converted it from Chinese to US dollars. They're easily making a couple bill of net income a quarter. What's the forecast? Yeah, so it looks like they had a total one-time adjustment this quarter. They didn't actually only make 1.89. They probably made around 3 bill. But yeah, interesting. It is tough to be bearish at a 7 PE, but again, it's Chinese. And it's tough to own anything Chinese. Xi Jinping will screw you. But I like Amazon, Amazon has something called Amazon Nova. It's a new direct. We got like early access to it. It literally is everything on the app is under $10. It's called like Amazon Nova. And it's a day. It does exactly what Temu does, where it's only like cheap $10 and other stuff. But they're separating it from the main Amazon business because they don't want to devalue how great the already Amazon is and make them look cheap. So, Amazon faces potential cost increase under renegotiated Anthropic pricing deal. Well, that doesn't matter. Amazon legit owns 20% of Anthropic. I agree with you. I think they'll figure out how to build reliable cars. First gen will be a disaster. Second gen, yeah. They're building a BYD factory in my city. Really? Wait, are you in the US? I made a video a long time ago. If we allowed Chinese vehicles, like honestly, they're cheap and they're good, they would take over the US market. And they're slowly taking over the European markets right now, these Chinese vehicles. Yeah, here's BYD, the car company. They're like basically Chinese Tesla. They about to get sued. Hey, what's up, TomTom? Yeah, Ouster, dude. Ouster, this is that LiDAR play. My quickest ever 200% gain. I bought this one like 2-3 months ago. Basically, they had some really good deals. They just qualified for like Build America or something where they get like exemptions in federal tax credits because it's produced in the US. Anyway, there's tailwinds from Ouster from autonomous vehicles and drone defense systems using Ouster. Too bad I only bought 4 shares of this company. Let me see if I can find the specific news here for you. Yeah, so here we go. Ouster Rev 8 LiDAR sensors granted Build America, Buy America compliance. So yeah, they get those like federal tax refunds and stuff. I don't know. Anyway, that's why the momentum's been so strong there. And they got a bunch of orders yesterday. I got J&J today and plan to hold for 1 week or maybe more. I'm still scalping. As for Pinduoduo, it could happen the same with Wish and Alibaba. Yo, Wish used to be publicly traded. Oh my gosh, then they traded ticker symbols. I remember Wish.com, that was the original Temu. I just love Amazon. I don't even think I'll be able to find their stock. Maybe, nah. Anyway, I think they changed their ticker symbol. Ooh, all right, last stock we'll look at is NVIDIA. Then I gotta go. Thanks for everyone that shows up today. So here's NVIDIA stock right here. The perfect AI picks and shovels play. They make the best chips. NVIDIA signs deal to supply 170. Okay. NVIDIA scales back Rubin Ultra to 2-chip design due to packaging challenges. Huh. Well, NVIDIA's market share is being eroded by Amazon and Google TPUs. CUDA ecosystem is weakening, says an analyst. Okay. Here's why it's tough to be bearish, though. NVIDIA GPU rental prices declined 30%. I don't know. Is that bad? Is that bad for CoreWeave if GPU rental prices? Anthropic Claude model launch on using NVIDIA Blackwell Ultra GPUs. NVIDIA launches safety system for robotics and physical AI. NVIDIA to replace Apple as top-weighted stock. Anyway, let's go look at their actual fundamentals here. Rising AI memory chip cost prompt AI and customers to explore their HBM dependency among the shortage. NVIDIA's... Actually, I'm kind of still reading the news here. Anyway. Okay, please, can we, like, forecast to my... Uh-oh, my Wi-Fi just, like, crushed. The kilobytes are 0. Well, maybe I'll just end the stream right now. Uh-oh, I'm lagging hard. Uh-oh. Well, that's not good. Well, okay, there we go. It says it's good now. You know, if we have any more issues, we're about to end the stream anyway, so who cares? So NVIDIA, here's why it's hard to be bearish. They're at a 19.7 forward PE. They're only trading at 19.7 times next year's net income. That's honestly, like, cheap. Like, that's why we're not in a peak bubble. If we go to the S&P 500 right now, you know, here's why I honestly think there's a lot more room for us to grow. We go to the top 10 holdings, you know, 7% of the whole S&P 500 is NVIDIA, which trades at 19 forward PE. 4.4% of the whole index is Microsoft, 19 forward PE. Amazon, 27 forward PE. Google, 27. Broadcom's a 28, which is cheap. Micron's a 9. Meta's a 17. The literal top weightings, the biggest components of the S&P 500, I still feel aren't at peak bubble valuations, like especially NVIDIA at a 19. Like what? So anyway, here's the net income forecast. Like, there's still a lot of net income growth for an EPS growth on NVIDIA to come. Net income on the left is 31 bill. It's going to grow to 57 billion all the way on the right. They now have like a 0.5% dividend. They print free cash flow, print net income, and look at the net margin, dude. A 71% net margin. NVIDIA's collecting royalties. Every time you go buy an NVIDIA chip, or every time you spend $100 at NVIDIA, they keep $71.46 after paying taxes. Look, so the total revenue is 81 bill. They keep 58 bill after tax on that. Just ridiculous. But yeah, maybe the competition from, you know, other players definitely is something to keep in the back of your mind, but the 19 forward PE seems so cheap. And look at this. Morningstar says they're undervalued. Its entrenched leadership in data center AI infrastructure, propelled by its proprietary CUDA software ecosystem and robust demand for next generation Vera Rubin systems, will drive long-term value growth. So there you go. And NVIDIA is so big, they even own a stake in a bunch of companies, as we saw. You know, NVIDIA owns a bunch of Intel and, well, CoreWeave, Coherent, Synopsys, Nokia. So they have some investments as well. But yeah, if I was a shareholder of NVIDIA, I would not be worried. You know, I know the law of large numbers is kind of something to think of, because right now, if you buy a share of NVIDIA today, they're worth 4.8 trillion. For you to get a double on your money, NVIDIA has to be worth, you know, call it $10 trillion in market cap. It's a tough double just from numbers, but I still believe if you just, honestly, if you buy a share of NVIDIA today, you should get S&P 500 type returns, like 8 to 10% of your money back every year, even buying today on NVIDIA. That's, of course, not financial advice, but honestly, that valuation, like, NVIDIA is just going to slowly climb higher. That's what I suspect. No way, Amphenol's up 6% now. I haven't even checked on the market since we've been streaming. Wow. These AI infrastructure stocks are doing great, it looks like. All right, well, let's end this with a quick portfolio update. Then I'll get out of here. Thanks to everyone that showed up. Oh, I see Redwire. What do you think about SpaceX integration on July 7th? You know, that's not going to make me buy SpaceX shares. But that's certainly interesting. That should bring some passive numbers into there. Yeah, I think they're getting added into the NASDAQ 100 and the S&P 500 on July 7th or 8th or something. BE, good stock today. Invest your money for long term. Oh yeah, BE is like that alternative energy storage company. So here's Redwire. I believe it's just a drone company. Let me see if I can. Fugazi Research. Fugazi, that's funny. Issues short report on Redwire. Okay. Citing share dilution and cash burn concerns. So yes, the shares outstanding was at the end of 2024. There were 67 million shares at 2024. Now it's 199 mil. And so they're having to issue a lot. They've diluted the life out of the shareholder. Let's see what the net income, and they're still very net income negative. See, that's why they have to issue shares, because how else are they going to pay off all these negative net income that money has to come from somewhere. The revenue is very growthy, though. The revenue grew 57% year over year. Was that? Oh, that was probably from an acquisition. You know what? We don't need to worry about so much about the share issuance because part of that, this 157 million, was to do an acquisition. Look at how their balance sheet changed so dramatically. So maybe that acquisition was good for them. Anyway, it'd probably be better if we just judged them off their website. So enabling NASA's Artemis 2 mission. Redwire's advanced optical imaging and sun sensor technology launched on board the Orion spacecraft as part of NASA's Artemis 2 mission, the first crewed mission of the program. So they're in defense tech, space tech. Interesting there. So some sort of space company, but they're just so far away from making any sort of net income. It's a tough sell. Let's see. Here's the net income forecast. That's rough. So they've actually missed on the net income forecast. So that's another reason probably why the stock is struggling. They were expected to lose 26 mil. They lost 76 mil. Same with the quarter before. They're supposed to lose 31 mil, 30 mil. So the revenue is going to grow to 123 though. Has it ever been close to that? Okay, that's good. So revenue is going to hit a new record. It's never been close to 123 mil before. But I just don't love companies. Yeah, like look at the free cash flow, negative net income, and they're still like years away from making any sort of net income or free cash flow. It's usually just, those are stocks I kind of avoid. So yeah. Nobody went to the moon. Yeah, exactly. The Artemis mission launch, the human crew never went to the moon. It was like they completely rebranded what they originally said they were going to do. Maybe we can't get to the moon. Who knows? But hey, thanks, Looney. I appreciate you. It will join the NASDAQ 100 on 7th of July. Let's actually check out SpaceX really quickly. Is there any news? There's always news around SpaceX. Yeah, here they go. SpaceX should join NASDAQ 100. Expects 7.3 billion in passive inflows because of this. Interesting there. What is this down here? What? Musk previously claimed SpaceX could reach 1 trillion in annual revenue by 2030. Bruh moment. Okay. SpaceX completes 23 billion in bond offering. Any other news? SpaceX successfully tests Starfall capsule in space manufacturing. Anyway, I kind of agree with Morningstar here. The stock's overvalued. While its dominance in reusable rocketry and satellite connectivity provide a narrow economic moat, the aggressively lofty valuation and in the best of case scenarios for highly uncertain moonshot projections like the unproven orbital AI data center requiring extreme caution. So, even on the best forecast, they're very expensive because they're worth 2.24 trillion. They should not be worth 2.24 trillion, especially with Microsoft where it's at. Here's the mega caps right here. Yeah, this is where it puts SpaceX. SpaceX is now, basically just, they're bigger than Broadcom, Tesla, Meta, Micron, and they don't have as good fundamentals as Meta or Broadcom. Anyway. They're supposed to lose $2 billion next quarter. Then they're going to make 130 mil. Revenue is only 10 billion. Dude, this is so tiny compared to Meta and Microsoft. They can't get to 2.25 trillion valuation. So yeah. But honestly, the reason SpaceX is doing so well, and it probably will keep doing well for the next 30 days, is because of the low float. So only a couple percent of all the companies available to trade. So with such small shares outstanding that exist for investors to buy, and it's so oversubscribed, the order book, there's just no selling. There's way more buying than selling on the order book. And in 1 year from now exactly, there's going to be 40x more shares available to trade. So that just kind of happens with every IPO. The first week and month, it always hypes up, and then it kind of slowly goes back down. Nike has earnings today after the bell. Oh, Nike, I did own this company at one point. I'm glad I sold out of them. I foresaw this huge, this dip because the fundamentals were deteriorating. So, here's a basic thing. Revenue on Nike actually grew, but not faster than inflation. It grew 0.09, which doesn't beat inflation. So revenue grew 0.09, but the net income fell by 34. What does that mean in English? That means margins are getting crushed. Gross margin is down 3% after it fell 7%. Net margin is down 34% after it fell 25%. So margins are being crushed at Nike. And it's not just a Nike problem. It's also Lululemon, Under Armour, Adidas problem. They're all publicly traded as well, even Adidas. Adidas gained stronger commercial boost from FIFA World Cup than Nike on jersey sales and store traffic. Nike faces potential removal from Dow Jones Industrial Average due to low stock price. Nike CEO acknowledges turnaround taking longer than expected due to scale of operational challenges. Anyway, unfortunately, there's no good news around this company, but they report earnings today. So maybe they'll give some good guidance, who knows, but not one I'm gonna buy. It's just that's a commoditized industry, and kind of the hype around Nike, like the brand value, is slowly getting lost. Like people don't see Nike as much of a premium brand anymore. Got my butt kicked by Nike. Glad I cut my losses. Yo, same here. I did sell out of my Nike for a loss, and sometimes that's the right move to do. I did that with ChargePoint and UiPath. But anyway, here's my portfolio in the stream here. Thanks again, everyone. Please leave a like if you haven't already. It does help me out. And subscribe if you're new. We stream every day, and I sell nothing, no course, no nothing. So we're up 32% all time in this portfolio. And here are all my stocks by my most recent purchases. So I just bought Rollins, Moeller Industries, Netflix. These are interesting. I still don't know what I'm going to do with CF. I might sell CF because it's a commodity fertilizer stock, but we'll see what happens in the future. And I did also trim one share of AMD today. AMD was crazy. Yeah, it was up like 8%. So I trimmed one share of AMD. And I still got a lot of that, basically all that cash. I got $425 of cash on hand, ready to buy the dip. I think it's smart to have a little bit of dry powder. So yeah, we're up 33% all time. I love being fully transparent. I go to a bunch of other streams. No one shares their lifetime performance and stuff like that. Here's my Moomoo portfolio. This has been our real winner. Year to date, we're up 76%. We're up 35 grand all time in this account. This is our strategy where once we buy a stock in here, we're literally never allowed to sell it. So even though I'm up like 400%, 999% on Powell Industries, I'm not selling a single share ever. Oh, we just hit 1,000% gain on Powell. Let's go. But Comfort Systems, we're up 440. No profit taking at all. And Amphenol, dude, this is the stock that's really led to the gains. Crazy all-time high today. Congrats if you ever bought Amphenol. I've been shilling this company like crazy. If anyone's been a viewer, y'all know I've been pumping this stock every time it falls to the 130, 135, 125 level. I always buy more, and I talk about how great of a company this is. So I'm glad to see Amphenol on a recovery. And then finally, we have a Robinhood portfolio. This is known as my dividend-only account. If you look in the top left, that's what it's called because every stock in here does pay a dividend. Here's my lifetime percent change on every stock. So the only stock we're down on lifetime is McDonald's. And I did buy a fractional share of McDonald's yesterday. Yeah, year to date, we're actually negative year to date. Our other portfolios led to most of our gains. We're up like 76% in the other account, but we're down in this account year to date, up 11% the past year. We also have a Roth IRA, which we started a year ago pretty much. We're down 1.3% all time. We just keep it simple. We got 4 stocks in here, 7 stocks in here, 6 stocks in here. Yeah. What about Pepsi? Oh, I guess very last stock we can look at Pepsi. If we look at Pepsi, they are honestly, this is one of the better food stocks to buy, like out of General Mills and Campbell's Soup. Honestly, I love Pepsi. I love the Frito-Lay business, Lay's, Ruffles. They own so many like products I like, but there may be a shift into GLP-1, like weight loss prescriptions and being more healthy. Maybe people don't want Pepsis and sodas. And where are their brands? Okay, yeah. Featured food. Yeah, they own Tostitos, Quaker Oats, Doritos, Pepsi, Gatorade, Propel. I love Propel. I wonder if we can see all their... Oh, yeah, they just acquired this company like a year ago. They just acquired that company. Cheetos, Mountain Dew, Lipton. Really? Explore our brands. I mean, we've all heard of Pepsi. We know they own like everything. Zero sugar, cherry, Pepsi. Hey, oh, yeah, they own Poppy. That's like a good for your gut brand. Anyway... Oh, they own Mug. Hey, they stuff looks good right now. Hold up. Mountain Dew, Doritos Loaded. Is that Gordon Ramsay? What the? Wait. Yeah, wait. Doritos launched high-octane commercial starring Chef Gordon Ramsay and Mercedes. Huh. Anyway, I don't know why I'm fat. This is the last stock, and then I'm ending the stream, so that's why I'm spending extra time. I don't know. I'm more of a Coca-Cola person. I own the Coca-Cola Consolidated Company, but that doesn't mean this one still won't do good. The valuation's getting cheap. You know, a 16 forward PE, only trading at 16 times next year's net income. So PepsiCo beverage. Yeah, they're very diversified internationally as well. U.S. is only 55% of revenue. Then they got Mexico. Yeah. The Doritos, when I was in Cancun, well, it was like 3 years ago, the Doritos formula was different. They tasted so good. Anyway, here's the net income. They're consistently net income positive. Like other food stocks are on like a massive downtrend, but this one just always makes 2, 3, 4, or like 2.5 billion in net income a quarter. You get a 4% dividend. You do want to be careful of this payout ratio, a 93% payout ratio. Actually, let's go see how much exactly the dividend cost. So this quarter they made 2.34 because I assume this was a one-time adjustment this quarter. So I assume the payout ratio is actually like a 70. So let's see the forecast too. So yeah, they're forecasted to make easily over 2.5 billion of net income every single quarter. So every quarter, no matter what, they're always making over 2.5 billion on average. In the cash flow statement, you'll see how much the dividend cost. The dividend cost exactly 1.97 billion. So as long as they're making over 1.97 billion net income, they can easily afford the dividend. And they have for the past 3 quarters in a row and are projected to. Yeah, dang, they're supposed to hit 3 bill the next 2 quarters in a row. They were like the first people to buy Tesla's new truck, like long, huge like trucks to deliver them. PepsiCo's undervalued solid pipeline of health-focused product innovation, strategic investments in affordability, and robust international expansion will drive long-term value growth. Yeah, Pepsi is making like the Lay's chips more affordable. They were lowering prices on Pepsi products. And also, they are doing a shift to like healthier, good for your gut acquisitions. Like when they bought this chip brand back here. Oh my goodness, where is it? Oh yeah, like Poppy and these chips right here. Anyway, maybe that's a way to get away from the fears around people being more healthy and stuff. But yeah, I'm a Diet Coke kind of guy. Yeah, hey. Also, you wouldn't believe, so we just saw Pepsi's portfolio. They obviously probably own a bunch of other things. Why Coca-Cola has done better, the Coca-Cola stock has done much better than Pepsi is because Coca-Cola only owns syrups and drinks. They're not in like Lay's chips and food. So here's what Coca-Cola owns. Obviously, they own Sprite, Body Armor, Minute Maid, Mr. Pibb, Fairlife. That's actually seeing a lot of growth right now. Dr. Pepper. Actually, this is a bottler. They bottle for Dr. Pepper. They don't own Dr. Pepper, but they own Vitamin Water, Gold Peak Tea. They own Monster as well. Topo Chico, I love, Powerade, Dasani, Barks, Phantom, Core Power, Topo Chico, all these, Bang Energy, Rain. Those are kind of popular energy drinks too. Anyway, I keep saying I'm in the stream. I gotta go. Have a great rest of your day, guys. Thanks for showing up to the stream. Please leave a like before you go. I greatly appreciate that. Watch out for people impersonating me too. I saw nothing, no course book, WhatsApp. I'll never follow you, DM you. I've been watching since your portfolio was not that big. Yo, thanks. Yo, Propel is underrated. You're right. All my gains in my portfolio has literally came from the past year. Like a year ago, my portfolio wasn't even like half of what it is today. Literally, I got $30,000 in gains from 1 year ago exactly, all from this portfolio. Because 1 year ago today, this portfolio was like 20 grand. It's all the gains that just came from 1 year ago exactly. So yeah, hey, thanks. That's the crazy part. Things can change for you so quickly in just 1 year with stocks. And you can get these crazy returns by doing the safest and most disciplined thing, buying high quality shares. Dang, CEG keeps dipping. I'm about to buy more shares of CEG. I can't believe this. I don't believe it. Anyway, sorry.